Good afternoon, everyone. We are about to start the program, so if everybody could take their seats, we will be starting momentarily. All right, thank you, everyone, and good afternoon, and welcome. I am Nicole Marin, the Congressional Hispanic Leadership Institute's Director of Programs and Internships. Before we start today's program, there are a few items to discuss. First, we ask you to help us share the speakers' points of view as well as your own. So please be sure to follow us on Instagram and on X at the CHLI. After each panel discussion, there will be time for questions and answers. The discussions, including the questions and answers, are being live streamed through FIU's YouTube channel. The discussion is also recorded, and you can view the program again later and share it with others. It will also be uploaded to CHLI's YouTube channel, where you can go back and view it after the program. Now, I'd like to kick off the program. Welcome to our CHLI Congressional Public Policy Briefing. The Congressional Hispanic Leadership Institute is the premier organization founded by members of Congress to advance the Hispanic community's economic progress with a focus on social responsibility and global competitiveness. Founded in 2003, CHLI is a 501c3 nonprofit and the only bicameral and bipartisan Hispanic-led and Hispanic-serving nonprofit based in Washington, D.C. CHLI is dedicated to fostering a broad awareness of the diversity of thought, heritage, interests, and views of Americans of Hispanic and Portuguese heritage. I would like to recognize our Board of Directors and Advisory Council members present before we start. I think I saw Ruben Barrales with Wells Fargo in the room, so welcome. And for those, I'm sure they'll be arriving later, so welcome and thank you for sponsoring our briefing series. Our year-long public policy briefing series sponsors are Amazon, Capital One, Charter Communications, Chevron, Citi, the Coca-Cola Company, Coinbase, Dell Technologies, Dominion Energy, Edison Electric Institute, Gates Foundation, Green Hills Software, Opportune, Pacific Gas and Electric Company, Pfizer, ServiceNow, and 2042 Media. Thank you for your support. And I also want to take an opportunity to thank the CHLI team today as well for their work in putting together this program. Marianne, Bree, Angela, Sofia, Andres, Stephen, Bruce, Talise, Aisa, Mercy, Tia, and Maite. The CHLI Congressional Public Policy Hill Briefing Series provides a platform for an in-depth dialogue on current public policy issues that affect the U.S. Hispanic and Portuguese communities. These are briefings to educate and inform members of Congress, their staff, and Hispanic communities across the country. Today, we will be discussing finance and how to build economic resilience. We will learn more about these topics and how they are connected. There are many times that we don't pay attention to certain details in legislation because it does not impact us directly, or we sometimes think they don't. This is a chance to dive into legislation and get a different perspective. Our guest speakers will provide that insight as well. Please take time to listen to all the different perspectives shared today. Before starting the program, however, I would like to take a minute to promote one of our partners, Catch Skills. Catch Skills is all about making learning count, no matter where or how it happens. We all pick up skills in different ways, on the job, through training, in school, or even from everyday experiences. Catch Skills is a platform that helps people track and showcase their skills, formal or informal, so they have a complete picture of their skill sets. If you see to the side of the room here, we have a QR code. It will take you directly to catchskills.com, where you can sign up and start tracking your skills today. It also has a pre-written log that will help expedite the process of summarizing what you learned in today's discussion. Now, I would like to introduce our FIU host, Carlos Becerra, for some welcome remarks.
Thank you. What a great intro. And here during this season of thanks, I want to start with a big thank you to many of our partners that I see out there in the room. But in particular, there is no special, more solid partner than we have in Washington, D.C., than the Congressional Hispanic Leadership Institute. For decades now, I'll say, right? That is clear. And in particular, this past semester, helping shepherd Simon and Sophia, there you go, through an amazing set of experiences, and the rest of the CHLI Fellows, we're glad to have you here. So as we take pride here at FIU in Washington, D.C., we know we're the public research university in Miami. We're waving the Miami flag. Today's two briefings, I think, dovetail very nicely with Miami's role in the state, but also Miami's role in the region and our future, whether it be on finances and the role that the banking community plays in Miami. At FIU, we're proud, obviously producing so many university graduates as well as Miami-Dade College and University of Miami. But when it comes to that element of social mobility, I think that's something that we really take pride in because of our students. Thanks to the federal support and our Pell Grants, we're able to boost that economic success. And later on, we'll hear some of our energy-related projects that are funded by the federal government and with many corporate sponsors as well. But final set of thanks to, of course, our chairwoman, Ileana Ross-Lehtinen, someone that both organizations are proud to share as our madrina and really our active champion. And if it wasn't without her energy and drive, the future that we'll experience in the next few years wouldn't be there. And yeah. Well, with that said, I want to thank you all. We're looking forward to today's dialogue.
Thank you, Carlos, for having us here today. Now, I would like to introduce our chairwoman, the Honorable Ileana Ross-Lehtinen. Chairwoman Ileana Ross-Lehtinen was the first Latina elected to the U.S. Congress, where she proudly served from 1989 to 2019, including as chair of the House Foreign Affairs Committee. Born in Havana, Cuba, she built a legacy of leadership in foreign policy, Hispanic representation, and supporting women in politics. She now serves as Senior Policy Director at Aiken and continues to champion Hispanic and Latino leadership as Chairwoman of the Congressional Hispanic Leadership Institute. Chairwoman?
Thank you. As a senior citizen, I'm very happy to be the Senior Policy Director at Aiken. But thank you so much. Good afternoon. This is as low as it goes, right? I need to grow a couple of inches. Good afternoon, everyone. Oh, yeah, that's another way. Buenas tardes.
Buenas tardes.
Thank you. And I am so honored to welcome you to CHLI's Congressional Public Policy Briefing on Finance. Da-da-da-da. Is that not a great graphic? That says it all. That's an essay in and of itself. Today's discussion comes at an important moment. The way we as Americans interact with money, how we save, how we invest, how we borrow, how we plan for the future, all of that is changing at a remarkable pace. Innovation across traditional banking, digital finance, cryptocurrency, I can't even wrap my arms around that, family enterprise, all of that is reshaping the pathways to economic resilience and long-term prosperity. We know that everything is changing at a fast pace, so why should finances be any different? But just as important is the growing emphasis on responsible technology and strong consumer protections. Public finance, transparencies, and safeguards against fraud, they all play a central role in building trust from the American public, ensuring that innovation enhances financial well-being rather than creating additional risks. These forces are converging to reshape the American economy in lasting ways, and it is essential that diverse voices and perspectives guide that evolution. And that is why CHLI brings policymakers and industry leaders together to foster a conversation rooted in access, in accountability, and in opportunity. So thank you to our panelists. Thank you to all of you for being part of this important conversation. I look forward to listening to a meaningful and engaging discussion. And now I am so pleased to recognize our fearless President and CEO of CHLI, Marianne Gomez, who is going to introduce our panelists. Marianne, take it away.
All right, thank you.
I think all my notes are up here, right?
Yes, we just have to flip some
Yeah.
pages.
Okay, hold on.
Sorry, I got you off kilter.
Yeah, Nicole and I are fighting for the pages. Let's see here. We have, so just a note, part of it is that Congressman Henry Cuellar was going to come by. He just got called for votes. So I think we're just going to skip here. Oh, they moved him. Okay, let me do this. And then I'll join you here, but let me properly introduce everybody. Let me properly introduce, yeah, from here. Okay. All right, thank you. Here we go. All right, so I'm going to mention the different names of the panelists, and as I do, just coming up, save me this little spot here so that I can be on the level playing field here with you for the actual discussion. Okay, so everyone, Darren Carter is a Web3 advocacy manager at Coinbase, where he works with crypto founders, industry associations, and Web3 community partners to coordinate advocacy efforts, develop educational materials for policymakers, and promote the real-world use cases for crypto and Web3 technologies. Prior to his current role, Darren was a member of the Coinbase Giving team, where he focused on increasing education and access, accelerating open source development, and expanding crypto talent. He believes in the power of crypto and Web3 to create positive social impact, financial literacy, and inclusion across the entire tech and finance industry. He has close to 10 years of experience in security, risk, and compliance, and a master's degree in digital assets from the University of Nicosia. Is that right?
That's correct.
Okay, all right. Please join me in welcoming Darren. Next is Meredith Shields. She brings nearly 2 decades of invaluable experience in the investment world, having dedicated her career to investing and supporting early stage and middle market companies across private credit, private equity, and venture capital. For the past decade, she has been at the forefront of the intersection of venture capital and social impact. Currently, Meredith leads the City Impact Fund, a pioneering $500 million initiative born out of the belief that venture impact investing can play a crucial role in advancing economic opportunity for underserved communities. Under her leadership, City Impact Fund makes direct equity investments in double bottom line U.S.-based companies that are applying innovative solutions to address pressing community challenges. The fund was notably the largest of its kind by a bank, investing its own capital when it launched, showcasing Citi's commitment to leveraging its balance sheet for positive social change. Prior to joining Citi, she led the early stage catalytic investment portfolio for the Sorensen Impact Foundation. And she served on the U.S. Impact Investing Alliance's President's Council and the Global Impact Investing Networks for R3 Coalition. Welcome, Meredith. Next, Mariana Martinez. Dr. Martinez is a senior family dynamics consultant, executive director for family wealth and cultural services at Wells Fargo. She works with individuals, couples, and families to provide wealth education to help them with their goals around transitioning wealth across generations, providing specialized advisory services in family dynamics, education and governance, family and business history, and strategic philanthropy. With more than 25 years of experience in family enterprise consulting, Dr. Martinez advises clients on effective communication and decision-making strategies, educating and engaging the rising generation for wealth stewardship, preparing for family business transitions, and supporting the evolution of the family businesses. Thank you for joining us, Dr. Martinez. Next is Ezra Garrett. Ezra is the Senior Vice President of Public Affairs and Impact at Opportune, a mission-driven financial services company that puts its members' financial goals within reach.
With intelligent borrowing, savings, and budgeting capabilities, Opportune empowers members with the confidence to build a better financial future. Opportune has been certified as a community development financial institution known as CDFI since 2009 and is driven by a mission to provide inclusive and affordable financial services. Opportune has provided more than $21.3 billion in responsible and affordable credit, saved its members more than $2.5 billion in interest and fees, and helped its members set aside an average of more than $1,800 annually. Prior to joining Opportune, Mr. Garrett spent 13 years at Pacific Gas and Electric, one of the nation's largest energy utilities, serving in senior leadership roles, including Chief Sustainability Officer and Vice President of Community Relations. Ezra also spent 2 years at Target, leading community relations for the Western United States. Mr. Garrett holds a Bachelor of Arts in Political Science from UC Berkeley and serves on the boards of the American FinTech Council, Leadership San Francisco, and the Public Affairs Council. Again, a round of applause for Mr. Garrett joining us. And I think he also came in from the furthest, right? San Francisco? I think he won. He won that round. Okay. All right, so hopefully, let's just test the microphones, make sure we all can. Everybody's good with that?
Buenos tardes.
Okay, buenas tardes, there you go. All
Hello,
right.
testing.
Get them as close as you need to, so we're all ready to go. Okay. Let me start with this conversation here. So a couple of things. We're going to start with questions for each individual person based on their expertise. And so I encourage all of you to jump in if you want to add to it. We want to make sure that we have a very robust conversation, and then we're going to open it up to questions and answers. So as time comes up, please pause and jot down what your question is. It could be for all of them, or it could be for one of them. Again, we want to have that time to have that expertise. I do have to say very quickly before we begin, the moderator for the discussion was going to be Justin Velez Hagen, who is a doctorate in economics and an author of 2 books, and he's also currently the Deputy Chief of Staff for Governor Youngkin. Unfortunately, they had a family emergency with one of their daughters, so if you can keep the little one in the family in their prayers until Justin isn't able to join, and so I wanted to make sure that you all knew that to keep them in our thoughts. But he gave me the script, so I already know what to say. So, all right. So I'm going to start with Darren. Okay, how can emerging technologies like blockchain and digital assets expand economic mobility and financial inclusion for Latino communities, especially for what we refer to as underbanked in the community? So, Darren, why don't you start us off?
First off, thank you so much for having me here. Again, Darren, I've been at Coinbase for 6+ years, and I've experienced firsthand crypto's opportunity to help the underbanked and really provide a financial infrastructure that extends beyond some of the barriers that traditional finance may have. In my role on the Coinbase giving team, one of my proudest moments was when we initiated a grant to this organization called New Story, and what they do in El Salvador and Mexico and all over LATAM is actually help people get access to housing by using crypto as an infrastructure for digital payments. So the point that I really want to make is that crypto is an infrastructure, and the opportunity there is to do finance with a purpose. The purpose in this particular program was housing, and the communities that we were working with in El Zante were literally miles and miles away from traditional financial infrastructure, and the opportunity for them to get something like a mortgage was actually very immature and out of hand. So when we talk about reaching the underbanked with a purpose, this is what I'm talking about. It's giving them the opportunity to use digital financial products. In this case, they were paying using Bitcoin or stable coins on a monthly basis and affordable rates. But the opportunity existed because crypto is something that can be distributed across borders and is easily accessible to anyone with a cell phone. So we helped build over 160 homes. They pay their mortgage back on the blockchain, and the financial institution has the ability to immediately audit the the repayment rate. And it's been really powerful because it allows that financial infrastructure in this mortgage product to actually extend to the Salzante community, where traditional finance just had other barriers to entry. Like maybe it's the algorithms that you use to actually do credit scoring, or the physical infrastructure, the banking infrastructure that exists in San Salvador. But crypto, which is essentially just derived from cryptography, is a way to extend and rethink how financial services can be provided in a digital-first way across borders and in geographies that don't have the same type of infrastructure.
So just a quick follow-up. Did you see that what people were using it for, was it for housing? Was it for a small business?
Yeah.
What was that mix?
Absolutely. So, and the reason why I love calling out El Salvador specifically is because in DC, yes, there's a huge El Salvadorian population here. And El Salvador has also been vocally very pro-crypto, but a lot of people are surprised to hear that up to 25% of El Salvador's GDP was actually in remittances. And Americans here today send over $12 billion worth of remittances across borders to their families. And obviously there's a last mile delivery issue and so on and so forth. But when you see the people actually get access to this version of digital finance, they're using it for food, for water, for housing purposes. Communities in need know what they need, and they were able to spend it on what they need. And we were able to come in and provide the financial infrastructure, and the organization that we work with helped provide some of the physical infrastructure. So they literally 3D printed these homes, so very low cost. And they also printed the homes with a tienda in there. So you see the community members go from a situation of informal housing where their children aren't going to school, not because they don't want to, but because they have the real world issues of stable housing. And once you've solved that problem, you see a number of second and third order positive economic outcomes for them. And now, because of crypto's ability to transparently do this and extend the financial infrastructure, we have families that are running at the ENDA, and we have students who are not only learning about crypto, but are now going back to school and investing in their education. So it's really about finance with a purpose, and I'm glad that crypto plays a small role in that broader outcome.
Okay. You just generated like 5 more questions for me right now, but I'll come back to that later if we have time. I'm like, wow. Okay, because it's still kind of new to me. So I'm going to go to Dr. Martinez. So one of the questions here for you, and particularly it's around family businesses. So if you can share with us a little bit the importance of promoting family businesses in the Hispanic community. I think that we talk about Latinos in general being very entrepreneurial. You kind of mentioned that as well in terms of the services. But if you can share a little bit more about that based on your expertise in the services that you provide.
Of course, I was thrilled to see that family enterprise is what is in the title of our meeting today, because often it's about businesses as if all businesses are the same. But we know that family businesses, starting very small, but then they can become very large, are crucial for the development of our communities. In fact, we know that almost 90% of all businesses in the US and I would say also in the world are family run and family owned. So they are very important. In our community, it's even in the Hispanic community, it's even larger than that, where almost some say 99% of the small businesses are family owned. They start with their own capital,
Right.
with their own labor force. So it's really a labor of a community, of the family and then the larger community, to bring these businesses into businesses that provide well-being for their families and for the larger community. So focusing and supporting small family businesses is crucial. It not only brings economic benefit to our communities, but they also serve as anchors sometimes of a community activity. So people gather around those activities. They bring back value to the larger group. They support others in the community, providing, of course, employment, but also the sense that they're growing together and they're
Right.
doing something together, and that they can bring value to each other. So really, this entrepreneurship mindset that we know it's very prominent in our community has just emerges in the family business space in a beautiful way, in a way that really supports the community. So yeah, I'll stop
Okay,
there.
good. And coming back to that a little bit later too, I think we'll touch on it, but, and I mentioned it a little bit, right? We know the Latinos overall are very entrepreneurial. I was literally talking to somebody at another event last night. This is like reception holiday season, right? We go to like 3 different receptions on the same night here, trying to catch up with everyone and send happy holidays. But the other aspect was of family-run businesses, and then the whole other layer that I'm sure you deal with as well is the succession planning and, which kids get to do what. And we see it even on Wall Street, right, with all the different fashion lines, big family companies and businesses, right? They're trying to figure out who in the family is going to be the first one or the second one, and how all of that is navigated is really fascinating. So I'm sure we'll come back to that a little bit in the conversation here. So speaking of families and the underserved or underbanked communities, Ezra, this next question is for you, dear. So, from Opportune, there's been a lot in terms of technology and innovation. So, can you please share with the group what is that for Opportune? Historically, the communities have been underserved, but it seems that the technology and the innovation that's kind of in the space that you're in has really helped not just Opportune, but your clients, your services, and I believe you're also expanding services. So share a little bit of that with us.
Yeah, well, thank you for the question, and thanks also for including us and for convening the important briefing today. I did have a long commute, but it was worth it. The weather here, coming from California, that's going to take some getting used to. But thank you again for the question. So as a CDFI, Opportune, our mission is centered on access, providing responsible and affordable access to credit for traditionally underserved communities for underbanked U.S. consumers. And so it's really about trying to use technology so that we can say yes to somebody. I think most folks are aware that if you don't have a credit score, you largely can't even apply for credit from a mainstream financial institution, which usually means that folks in that situation are going to have to pay really, really high cost in terms of interest and fees for access to a loan. And many times they need the loan because of an emergency or because they want to take advantage of an opportunity, like to buy, equipment to start a family business, as an example. So at Opportune, we use technology to get to yes. We look at over 10,000 data points to help to develop our own proprietary credit score. So banks traditionally will rely on the credit bureaus, and so someone that doesn't have any information in the bureaus will need to have other signals sent to us to let us know that this person is able and willing to repay a loan. So again, it starts with the technology, but it doesn't end there. So what I would say is that while we kind of hang our hats on innovation and technology to get us to yes, it's really not enough to give somebody a loan, especially if it's someone for whom this is their first experience with a formal financial services product. You can't just give them the loan and say, okay, well, you're going to have to pay us back, every month, and, good luck to you. A lot of folks don't have the habits and skills that many of us take for granted to sort of establish the patterns that are needed. Or many folks, because they're underbanked, it's not going to be convenient for them to set up, recurring ACH payments. So a lot of what has driven our success has really been in the focus and attention that we put on personal servicing. So again, we're sort of a fintech, that's the term of art. We use technology to say yes, but we're very traditional and old school in many ways. We operate a very vast network, retail network that includes partners where folks can go and make a payment in cash at hundreds of locations across the U.S. A lot of fintechs, aren't able to offer that. And so I would say that, again, it doesn't start and end with access. It really just sort of begins the journey and understanding the community, being able to show up where they are. All of our agents are bilingual Spanish as well. So it's really taking a culturally competent approach to understanding not just whether or not they can repay the loan, but understanding, what are the things that you need to do to help them be successful with that product.
There's a lot of things. So thank you. I know that we'll come back to a couple of other points there, especially on the technology side. So as our chairwoman mentioned in opening the conversation, that we're also talking about responsible technology and consumer safeguards in driving the long-term financial stability, for an individual, a family, a business. So Meredith, this question is to you, dear. From your perspective, why are these elements, so essential in today's financial landscape? And again, kind of going back to our chairwoman's point about, I remember when I was in high school, I don't even know if they do this anymore in high school, but I remember in high school I had to take a class that included how to balance a checkbook. I don't know that I completely mastered that yet, but I don't even know if they teach that anymore in school. But you talk about like financial sustainability, just kind of understanding, to Ezra's point about credit scores, FICO, underbanked, underserved. There's just a lot in that area. So can you, as best as you can, kind of cover a little bit of that and share a little bit from your perspective?
Sure. No. Can you guys hear me? There we go.
Yes.
No, absolutely. So as we talked about a little bit, we are double bottom line investors. So we're venture capitalists who are investing for also social impact. With that in mind, we've been hyper focused on responsible technology, especially this year. So everybody in this room, I'm sure, pull out your phones. You have at least one LLM application, whether it's ChatGPT or Meta or something. That's the entire consumer economy right now, and it's driving consumer behavior, especially in financial services. That's exciting. That means that access, like getting to yes faster, is something that we're excited to be able to provide, but we're also a little nervous about the way that this trend is going. And so I'll give you an example. I had an opportunity to hear from a large fintech CEO recently who told a story that capitalized on the trend that this AI progression that we're seeing that's accelerating so quickly is truly being led by consumers, whereas other technological shifts have been driven very much by businesses, by engineers. This one is being driven by consumers on their own, finding new ways to use technology and then pushing the companies to meet them where they are. That's a pro and a con. So this particular CEO, he told a story. He found that his users were downloading and exporting all of their personal financial data, so aggregated credit card statements, aggregated bank, you know where I'm going here, aggregated bank details, and dropping that into their personal version of ChatGPT, and then saying, please tell me where I should cut my spending so that I can buy a house in 5 years or things like that. And those types of trends, he was explaining, his engineers can't innovate fast enough to meet consumers where they are, but they're trying. And that's what we need to do in order to deliver responsible tech, because of course it's not secure to drop all of your personal financial data into a personal version of ChatGPT, but consumers see the opportunity that lies in AI and in the power of bots and assistants to help you with such things. So we're hyper focused on that. So every investment that we make, we're carefully diligencing how the founders are thinking about that balance of providing access, but also being responsible overall. And then I'll talk a little bit about just in general, that those are the caveats, those are the things we worry about. The opportunity for AI to bring access and financial resilience is astronomical. I don't have to tell this room. Today, 30% of Americans are not financially healthy and resilient in the case of a catastrophe. And so when you think about what some of the new innovations that are coming out of financial technology can bring, it can bring things like helping people to thoughtfully save for a disaster. We're seeing some amazing innovations in insurance to be able to deliver, like for example, car insurance that enables payments not on a monthly ACH or credit payment cycle, as that could be inconvenient, but in other ways, and help people build that resilience. So we're really excited about the intersection of technology, but also being cautious in what we put in consumers' hands.
Okay, yeah, so I think that, One of the things that, to your point about it being more consumer driven, it's kind of like, oh, this is the latest shiny thing, and we all want to get in on it, and we start playing with it, and then we realize, oops, I don't know how to do the rest of it. So like there comes like that point where we're in it, and then we're not really sure, or we're trying to teach each other, and so it's just a lot. And I think that part of it has been also that we, as a Latino community as well, we over-index on mobile devices, on smart devices. We're cutting more and more the telephone landlines, and so we're just more mobile in that space as well. And so I think that there's always that balance. And I like to kind of use the example, or guess the analogy, is that in part of why we wanted to have this discussion with all of you is because remember when the internet was coming out and email was just coming out, and there wasn't a lot of policy related things regarding the internet or email or intellectual property or anything related to that. And we still haven't caught up even to that from a legislative standpoint. So, some of it is kind of learning what's going on and kind of helping each other figure this out as we also go. But to your point, Meredith, also really understanding from a consumer standpoint what we need to know,
And I'll just kind of double down on that, because I think we're so grateful to be here and to be able to have these conversations, because that point is exactly something else that we think about in broader cities. As we think about the speed and the progress of this technological acceleration, we can't have quarterly meetings and meet communities where they are. We really need to be consistently and intentionally sharing learnings, sharing feedback from the community, from the private sector, from the public sector, and working maybe closer than ever to make sure that products and services meet the needs of communities in a responsible way. And that bridge building, it feels like there's just a giant critical element around right now.
Yeah, we're definitely all in the bridge building these days.
Yes.
So the next question is over here to Mariana. So what are the most important obstacles that you see our family businesses in the Latino community to grow, prosper, scale? What are you running into?
Yeah, there are two main obstacles.
Okay.
One is access to capital, right?
Right.
Family businesses, small family businesses in our community are typically funded by the same family with their own funds, and that's a risky matter. So one of the challenges is how to access secure and stable capital for their ventures without having to put at risk their own livelihoods and their
Right.
balancing that is one. But we know that our community finds more no's than other groups when it comes to access to capital, so that needs to be addressed. The second obstacle is the education and the learning, because having a business, even if it's a small business, require knowing how to handle a business. It's different than managing a household, for example, right? So learning and literacy around family business, about business in general, about finances, is another obstacle. So the two main obstacles are access to capital and education, preparing the next generation, etc.
So a follow-up question for you then, from a literacy standpoint, how do you advise people? I mean, maybe by the time they come to you, they kind of already have an idea of what they want, and maybe they are a little more knowledgeable than others might be. But so if you're just starting to figure out that whole financial literacy, for our audience here and virtually, what are some of the things that you tell people to do, or what's the homework assignment?
I would say approach your community resources. There are plenty of community resources where people come together and discuss what they're doing and what are best practices. They may bring experts. So learning in community is, I think, one of the best things, and you can advance some of your needs there. And of course, now there are so many resources available for free of charge about how to build a business, how to sustain, how to budget for your business, how to create a fund so you can address an emergency in your business, how to look into the future instead of looking at the very next week or month.
Yeah, that's
how
hard.
to plan for a longer term, etc. So there are resources there. So learning on your own, but also learning in community as a family and as a larger community. There are
Okay,
resources in
that's
our
good. That's important. And I know that there are, it's not something that, like a program that we have at CHLI, but I know there's a lot of other nonprofits that have connections, or, I know a lot of you do too, have connections with other community organizations that have those kinds of resources. Or like, I know in my hometown in Stockton, California, El Concilio has, monthly workshops or different conversations with people. They bring in guest speakers for people to kind of unpack that, because sometimes it can feel a little overwhelming.
They even have some of these organizations provide individual guidance. So you bring your situation to
Yeah.
somebody who can help you with some pointers and then come back and review,
Good.
etc.
Okay. Ezra, going over to you, dear, next. What are some of the other factors beyond the technology that we kind of talked about that you think are playing a significant role in how you reach and support different customers in their financial journey? We talked a little bit about that FICO score, and how some places are also trying to figure out creative ways to maybe have like a different kind of FICO score, but also just kind of people help them through like that muscle memory of this is what you need to do in order to kind of figure out a FICO score.
Yeah, it's so that's a great question, and it really comes back to sort of what you were discussing around financial education.
Yeah.
Some folks actually got that in high school. I can tell you that, that my nieces and nephews in high school, if someone tried to teach them how to write a check, they'd ask you, what is a checkbook?
Oh, that's why I said, that's, I don't know what they learn from a finance perspective in high school now, but yeah.
So even for those of us that kind of had those opportunities, everything is different now. And so for a person who's coming into a financial product for the first time, who never had an opportunity, it's completely foreign. Almost like learning a new language, I think, in some respects. So I talked a lot about how technology enables us to say yes. I talked about how we have sort of servicing programs in place where we can, really support and interact with our customers. We take payments in cash. We do it on a biweekly basis. It's more affordable. But on top of that, we feel it's really important to provide access to financial coaching, which is a little bit different from financial literacy, so to speak. Financial literacy, that term of art really applies to, you're kind of like having someone sit down and teach them the lesson or give them paperwork to read. Financial coaching is a really much more hands-on approach where they're working with a third-party expert, not an opportune person, where they actually get a chance to be guided through the process of, understanding their obligations and commitments, understanding what their income is, understanding how to build a budget, understanding how to make a plan for something that they want to acquire or purchase in the future. So we've offered free financial coaching to all of the people that come to Opportune, whether they're accepted for a loan or not. And we do that through a partnership with Unidos US, which is many of you know.
As I mentioned, different nonprofits have different services, so that's great.
Yeah, and so we think it's important to connect folks to a service provider that we can trust is going to take care of them, who can serve them in the language that they prefer, and who will also, help guide them, so that they're not just successful with our loan product, but they're taking advantage of the other opportunities that come with that. One of the things that we do with all the borrowers that we serve is we report them to the credit bureaus so that they actually get credit for positive performance. And then they can go on to, other opportunities as well, like a home mortgage or a bigger, auto loan, that sort of thing. So I'll leave it at that, but really it's not just servicing, not just saying yes, but it's also connecting people with experts that can help really guide them so that they're enhancing their understanding of, how this all works and how to take advantage of
So
this.
just to kind of circle back a little bit on that. So the financial coaching, a little different than the financial literacy piece. How long have you been doing that?
I don't know about since the beginning, but since 2006.
Yeah.
So the company was founded in 2005, but very, very early days. We actually supported legislation in California that strongly encouraged licensed lenders in the state to offer. They don't have to provide it, but they have to just at least offer it.
At least offer it,
Yeah.
okay.
So,
very good.
So it's been
Okay.
it's a core
So
part of what we do.
you have customers that have been doing this for quite a while then, or at least have had the opportunity to do that for quite a
Yes,
while.
absolutely, absolutely. In fact, a lot of the folks who take us up on it are not customers. A lot of the folks
Oh,
are
really?
people who were not approved for a loan. We
Okay.
still offer it to them, and a lot of times those folks will come back and they'll be approved down the road because they've been able to get coaching on what are some of the things that they can do to kind of build their sort of credit profile, so to speak, so that they have more headroom, for example, in their monthly obligations to afford to repay a loan.
Okay, that's good. So it's helpful to have, again, like the whole financial literacy piece, the coaching, whatever it might be. And sometimes it's really helpful, like in other things in life, to have a third party person help you out. And it's not like your mom or dad or your Theo and Thea or somebody else, because their perspective, it could be a little different, right? So it's kind of nice sometimes to actually go to like an organization and a formal structure, at least, that kind of gives you that little bit of a different comfort. At least I'm thinking of my own family, because if you're first generation, if you're the first one to go to college, you're supposed to know everything. You're supposed to be able to answer every question your mom and dad have, right, about everything. And you're like, I didn't study that, Mom. I studied something else, right? So I've had a lot of those conversations with my dad, trust me, especially when he questions me why I didn't go to law school. And I'm like, okay, that's a whole nother conversation, Dad. Yeah, I know. Meredith, this next one is here for you. So talk to us a little bit more about the City Impact Fund and its approach to responsible innovation, kind of a little bit of what we had talked about before and kind of adding to this whole accountability, personal responsibility, all of that piece.
Yep, sure. Can I first though comment on the financial
sure.
coaching and double down on? Gosh, I love everything you're doing. We're like Opportune, we also think financial coaching, financial literacy is incredibly important. And one, like back to my beating the drum on technology, it's my day to day. Is we're excited about the opportunity that technology has to embed financial coaching into financial services that exist. So, an example is one of our portfolio companies is a company called Clerky. And in fact, Guy, the founder, he just moved here to DC.
Okay.
He created this company because he had a number of different credit cards and realized there's no can't pay button. Like you either pay the minimum balance or you don't pay or you pay over it. But there's no I can't pay, help me. Like you call, you spend a lot of time on the phone, you try to figure it out. So his company is trying to embed some of that financial coaching element around they're using AI to look at spending habits, and they can look as far back as the financial institution will give them, and then recommend to a consumer, okay, you have indicated that you're having trouble paying this month. Here's what I can see. Like you have one credit card with a 15% interest rate and one with a 20% interest rate. Let's do $5 here and $4 here. And by the way, we need to renegotiate like this subscription that you have or whatever the case.
Oh, interesting.
And
Okay.
it can do all of that like within a couple minutes. It can pull together, and then they use human in the loop.
Cool and scary at the same time.
It is, which is why people have to be, people have,
Yeah,
it's
yeah.
unbelievable. But people have to be involved. So back to like,
Right.
you need to know your community, know who you're talking to. So they use a human in the loop philosophy too. So an actual person is available to walk you through the recommendations of the system. But agree, like a financial coaching aspect is just so important to resilience. Okay, the question that you asked, how does the City Impact Fund think about things, responsible investing? So again, we have, and I've been in impact investing for the last 10 plus years. I think the way that City does it, and the reason I came to City is because they're taking a really unique approach. And that's A, that we're using our own money, we're using our balance sheet, but B, I kind of report up through two sides of the house. I report to finance and I report to the head of our community investing and development.
Okay.
And so I really do have two goals from two important parts of the organization, and that's to invest in viable business models that are doing great things for the world. And then I have KPIs for both of those. So we built a system and a process that enables us to invest in those types of companies, which there are more than you think, right? Like The one I just mentioned is a great example. Every dollar of revenue that Clerky generates enables somebody to better manage their debt. We invest in companies that provide like access to better health care for seniors in rural areas. We invest in companies that help provide child care to working families and adults. We just invested in a company that is filling a gap in estate planning and grief support. So this is something that we see across the communities we serve where the loss of a family member, particularly in the event of a family-owned business, can be catastrophic. And so this company is using technology and human in the loop, like real people as coaches, to provide estate planning and settlement services to families who've lost somebody recently and try to avoid that catastrophic financial and mental health impact. And so I give those as examples because the way that we approach it is for every company we look at, we first and foremost look at who they're serving. On my team, we invest in solutions directly for underserved communities. So these are communities across our country that are experiencing market failures or market gaps in access to things that they need in order to prosper. And so that cuts across access to jobs, access to education, access to economic mobility and financial resilience. So the second thing that we look at is what is the company doing? Like how are they reaching communities? Because there have been a lot of examples in history of companies that are good, but we're looking for the companies that are doing good. And so like have intentionally designed a product or a service that is solving for this market failure or market gap being experienced by underserved communities. And then the last dimension, and the reason why we're venture capital, is what we call our type of investments, is because we want big changes. We're not looking for a small change that only helps 100 people here and 100 people here. We want to change the game and create a better system overall. And so our third dimension is how much does it help? And so if a solution, I mean, we look at 1,000 opportunities a year, literally. A lot of them have a marginal potential impact. We're looking for the ones that have a big impact, like creating financial safety nets, enhancing affordability to things that you need. Those are the types of things. And then negative externalities. So be remiss in this AI world if I didn't talk about this. We can get so excited about different innovations and things that come along, but part of our process is to always question who loses. When something new comes about, who wins and who loses, and we think it's our role as an impact investor, but also as part of a global financial institution to make sure that we're hyper mindful of that and trying to mitigate further expanding the wealth gap, further expanding disparities that exist.
So, do you also help people scale, or do they have to show up at a certain level already?
Oh yeah, no, that's the favorite part. So we hope to come in early when they have about $1 million in revenue. We're not the earliest, but when Citi can come in at like around 1 to 10 million in revenue, that's the point at which we can bring our network of 250,000 employees around the world and our expertise globally to help companies to scale. And so examples of that are we have five of our companies today, we have actually become clients of theirs. And so that can become rather game changing. At the same time, they're helping us to better serve our communities. Other ways that we support and help is by enhancing their visibility. So we put our founders on our stages. I think the stat is that every single day of the year, there is a Citi event going on somewhere in the world. And so my team, we try to get our founders and their innovations out in front as much as we can. And then importantly, any area where we can lean in. So if we're investing in a fintech, we know a lot about compliance. We know a lot about how to scale responsibly. We have an amazing employee network of folks who want to help,
Cool. All
and
right.
so we can bring that power into. But yeah, we want to see them grow.
Okay, that's good. That's good. So thank you. So the next question is for Darren. So there's been a lot of conversation about crypto, stablecoin, Bitcoin. I'm sure I'm missing something, but yeah, there's a lot of layers to it. Can you please share with the group in like very simple terms, Darren? Okay, don't get fancy on us. Okay, very simple terms about the landscape from a regulatory standpoint in regards to the crypto and digital. I think there's committee meetings going on both sides, on the Senate and the House. There's also at different state level also trying to figure out what to do. You talked about the use in other countries. So if you can give us a little bit of texture as to what are some of the policy type of conversations maybe that you're having and what people need to know about so that they can also be engaged.
100%. This is such a phenomenal question, especially for this particular time right now. And before I do hop into the question, I do want to also acknowledge the fact that some of the themes that we've been hearing earlier today are, one, the pace of innovation that we're experiencing today is like we've never seen before. The importance of education as a foundation for adoption, and also just being cognizant of what the externalities are with this new technology. Crypto has been around for years and years. It is something that U.S. Congress over the past 2 congressional sessions have really taken seriously. So in the last congressional session, there was a bill called FIT 21. This essentially helps define and regulate digital assets broadly. And digital assets in crypto, I'd say, are somewhat synonymous. And it passed the House with tremendous bipartisan support. Over 71 Democrats in the House had voted for it. Unfortunately, the bill itself didn't get passed into law, but it was also the foundation for what we're seeing literally today in the Clarity Act. And the whole goal is to help everyday consumers understand what are the rules of the road here. And when you're interacting with this new technology, like how are things defined as assets? What are the rules for centralized entities like Coinbase? What are the proper disclosures and the ways for people to responsibly interact with this new technology? And a lot of my work that I do at the federal and state level is educating policymakers about what is the technology and what are the use cases. And I think the reason that education is so important is that without education, you can't have responsible adoption. And there's this phrase that says, a rising tide raises all boats, but only the boats that are in the water, right? Because if you don't have the proper education, that rising tide will actually sink your ship. So I think that that's why it's so important for us to get the order of operations correct. And right now, we've been doing a lot on the Hill to educate policymakers about digital assets, the future of innovation here in America. And now the Senate is engaging in a bipartisan process in Senate Banking and Senate Ag to help advance what the House had passed in Clarity.
Okay.
So literally, maybe in a couple days, they might notice for a markup, which would be very exciting. We see some momentum there. But I'm most encouraged by the engagement from members in their offices to really dig into these issues, because crypto is very broad and it's very complex, and it spans the gamut from crypto as infrastructure to crypto as digital assets and everything in between. And it's something where we also want everyone's views reflected. This is not a partisan issue. This is a technological issue. And as you were alluding to earlier, this next generation, they're not learning how to balance a checkbook and do everything that our generation may have been taught. They're all digital natives, right? And they're moving at a pace that is just so quick, and it's all consumer-led. So they're going to continue to interact with these technologies, and it's our responsibility to not only educate the consumers on how to engage with this, but the policymakers to get the policies right. Because we also start to see a lot of this innovation, at least in my industry, moving offshore. And the danger in not having a regulatory light here in the United States is that it doesn't create an opportunity for compliant founders who want to do good and be good to step into the light and step into the light and say, we're doing things the proper way. So over time, you start to see foreign companies still engaging in this activity, the consumers still demanding that technology, but the standard that these foreign institutions are holding themselves to may not be reflective of American ideals or values, and that overall doesn't serve well for consumer protections.
Yeah, so, and also just because it's a global economy, right? So again, going back to the days in high school when I had to learn how to balance a checkbook, we didn't have smartphones, we didn't have email. I'm really dating myself now, but so because of the globalization of everything, right? Personally, business, policy wise, now we're in a phase where we also check to see what other countries are doing.
Yes.
We didn't always do that, for the good or otherwise, right? We didn't always check to see what other countries were doing or how they've evolved in a certain category or a certain, industry or what have you. So it's again, there's a lot of layers to that, but
If I may double,
Yeah, go ahead.
If I may double down on that point, the U.S. currently is behind in creating legislation that will, eventually allow for regulations, and it has been years and years and years of advocacy and education that the industry has been engaging in that has brought us to this point. Obviously, we're very excited, but we need to continue to lead on this. The world is looking at the United States to establish clear rules of the road for this industry. And I remember over 6 years ago, I was actually in the Mission District of San Francisco when I had first learned about crypto. And I looked across the street of Mission, of Mission Street, and I noticed a very, very long line of people waiting to pay a lot of money and wait many days to send money to their family. But I also observed a huge tech ecosystem of Google engineers and Salesforce engineers who are all excited about the future of innovation. And it was just amazing, well, not amazing, but it was almost disheartening to me to see just how wide the gap was and the realities of over here on this side of Mission Street and over here, where all the tech people are living and thriving. So that's where I started my journey to learn about this industry, and why I decided to ultimately, join Coinbase, which is a U.S.-based company that has gone public and is engaged with our regulators and with our legislators to push for rules of the road for this industry, so we can allow those good actors to step into the light.
Okay, good. This is my last round of questions. I think this is my last round, or do I have one question for everybody? Because I know we started a little bit late and we want to make sure we have time for questions and answers. I need to stop to do Q&A at 3:50. Where am I? Okay, I only have a couple. If you don't mind, I think I'm going to go to the question for everybody. And then we'll, if we didn't get to the last questions here, please make sure to incorporate in your answer any legislation that people need to be aware of. That's always really important, in these conversations. As Nicole said in the very beginning of the discussion, is that, we're here and we're having this conversation and it is being live streamed and it'll be recorded and made available later. But sometimes we kind of get into our DC jargon, and so we just want to make sure that people understand what legislation they should follow or what is going on the Hill. And so I'm going to kind of just go, actually, why don't we do that first, and then I'll ask the question. So Ezra, why don't we just start with you, dear? Is there any specific policy, legislation that's out there now that your team is working on that people here in the audience should know about?
No, there isn't one specific piece of legislation. There's like 100 of them, but it's all sort of.
We don't have all day, sweetheart. So just gotta narrow it down here. Narrow it down.
Well, so what I would just say is that Robin, you spoke about the importance of innovation, and as innovators, we understand that this puts pressure on policymakers to keep up with us in terms of putting rules of the road in place, putting guidelines, putting frameworks in place that folks can follow, and that within which consumers can be protected. So I'll just say two things about that dynamic. Number one, we understand, but we want regulation. We want to know the rules of the road. We're asking for it. We support it. We'll discuss it. We'll adopt it, because whether we debate along the way about the right way to put the regulations in place. We fundamentally want most regulations that everyone can see and follow, and we can hold ourselves accountable to, we can hold each other accountable to. So that's the first thing. The second thing I'd say is that as we think about big policy ideas for big new things, it's also important to recognize where there may be robust regulatory oversight and enforcement by federal regulators or by state regulators. So I'll just kind of pick on the AI space and financial services. It is appropriate and understandable that a lot of attention is being put into putting safeguards around the use of AI and automated decisioning systems. It is also true that in the financial services space, biased and discriminatory credit decisions are already illegal and are already enforced in a very robust way, both at the federal level and also at the state level. We're based in California. We have a very aggressive and proactive state financial regulator as well. So again, I'm not saying that financial services companies should get a free pass, but know that we want to see good, robust regulatory oversight. But we also want to make sure that we're not adopting things where overlaps between state and federal, or even sister agencies at a certain level, where those overlaps may be in conflict with each other or may be duplicative.
Okay, all right, good point. Dr. Martinez, how about you? What are you seeing in terms of policy or things that we need to know about from legislation, just to be aware, especially in the area of your expertise in family businesses or any other aspect?
I'll go back to the point of access to capital.
Okay.
And making sure that there is fair treatment in all of these groups where capital is harder to have access to. So just the awareness of that problem that happens out there in the streets.
Okay, all righty, thank you. Meredith?
I just comment on a theme that we've been tracking, is something that I mentioned earlier around responsible consumer usage of technology, especially financial technology, and tracking. We've been tracking closely the products and services being developed and how people are using them, and watching for potential issues there.
Okay, are there any agencies that you work with, federal agencies or commissions, anything like that people need to be aware of, or kind of, if they want more information, where can they go?
I would defer that question to our government affairs team. Kylie's right here in the room.
All righty,
so
we'll come
catch
back
her
to that.
afterwards.
And same coming back to that same question here too for you, Dr. Martinez. Is there a particular federal agency, any other place in particular that people can go to and get more information if they want to get that?
I'll do the same.
Okay, all right, so we'll have to come back to the government relations people. You've already been queued up. You're going to be answering first before we get to questions. So you already mentioned it a little bit, but what's the legislation that you were talking about? That's on the House side, right?
So on the House side, it was called the Clarity Act.
Okay.
And then now that product has moved to the Senate, and the Senate has their own product that they're getting ready to produce. But touching on the themes from before, Ezra, I think you also shared about the risk of regulation by enforcement. And obviously the industry has experienced that over the past couple of years because the rules have not been clear, and it's not clear where certain entities are or are not breaking certain established rules, and where regulators have certain authority. So in our space, a majority of the conversation is about, is it the SEC or the CFTC that should be regulating the markets of these activities? What is the definition and the taxonomy of these assets? And it creates a lot of...
So back up a little bit. What was the alphabet soup? So that people understand who don't understand it.
You can tell I work in crypto
exactly.
because of all the jargon here.
So
the Securities and Exchange Commission, as well as the Commodities...
You can't even remember what it says it so fast.
Yes, Trading Commission. Thank you. Are the two primary regulators that would likely have domain over this particular part of the digital asset space.
Okay.
And it is the role of Congress to help them understand where their authority starts and stops, and how those markets should be regulated, and which actors should be regulated.
Okay.
And Coinbase and all the other institutions here in the United States all now seek out state clarity. So we have money transmitter licenses in all of the states that we operate in. With NYDFS, we have our BIT license. In California, we have a similar, certification that allows us to operate within the state. And for this space to continue to grow, you do need a consistent and clear federal framework that'll define this across, all. As you're alluding to, this is, global finance,
Right,
digital,
exactly.
digital products. So right now, like literally right now, I know the Senate is working on draft text for their version of the market structure legislation. And then earlier this year, there was a bill called the Genius Act that passed in a bipartisan fashion, one of the very few, bipartisan pieces of legislation this year, and that helps define stablecoins. So that is like a digital dollar on a blockchain backed by a United States Treasury asset. And that's hugely important as well because we want people to have the ability to use a dollar with the convenience of Apple Pay, but the affordability of email. That's what that does.
Wow, there's just so much going on in terms of the technology and the innovation. So, okay, who was it that we needed to hear from first? Who was in the audience to answer the policy question? Who is the GR folks?
The bus stops.
Dr. Martinez, who's here from your GR team?
Ruben Morales is
Okay,
our-
Mr. Ruben Barales. So, Bree, give the gentleman the microphone. So what's going on that we need to know about? What are some legislation?
Well, I won't get into the legislation generally, but I think from the regulated financial services industry, the balance is just to make sure that as these new opportunities come online, these new technologies, that there's a balance. We have to, there's so many regulations that we have to abide by to make sure that deposits are guaranteed, that we have a certain amount of money in the bank, literally, compared to how many loans we let out and all that. And so the ease of cryptocurrency and the like, it's stablecoin, it provides great opportunities. Just want to make sure that that those safeguards are in place so that folks don't lose their money, their life savings in some way.
Okay, all righty, good. And was there somebody here, Meredith, for you to respond to the,
Kylie Patterson is right there.
okay. Nicole, if you can pass it on to the young lady over here in the front. Thank you.
It's so funny because I grew up in a Baptist church, and whenever you're a visitor, you have to announce yourself to everybody in church. So, hi everybody.
Not here
I'm
at CHLI.
Kylie Patterson. My first time.
I'll just find you, dear. Don't worry about that. Don't worry about
You have to
that.
raise your hand.
We'll find you, dear. Okay, so what's going on policy-wise? What do people need to know?
Yeah, ditto to everything that was shared. But one thing I want to lift up is around housing, and we didn't talk. The conversation didn't really go into that, but there were some provisions that were included in the One Big Beautiful Bill, which should accelerate multifamily affordable housing and housing access. And now the real question is making sure that actually comes to fruition.
Okay.
So looking at ways to continue to make improvements and amendments to it so that it gets the outcome that we want, which is, from most estimates, there's somewhere between 3 to 5 million homes that are needed, and that right now there's a huge gap. So looking at solutions around multifamily as well as single family so that more people can buy a home and be a homeowner and build wealth, I think is really going to be a primary conversation over the next several months. And we've already seen that kind of ambition from the administration and from both sides, both chambers as well as both parties. Okay. So I'm excited about what that looks like and what we can do together.
Okay, thank you. And so now open to questions. Who has some questions for either all the panelists, individual ones? Over here in the...
Hi. Yeah, great conversation. I was curious about, we talked about like trying to set up the families to pay their mortgage, but at the K through 12 level, what kind of digital tools are we, I guess, young people using now to kind of help parents monitor their spending habits, behavior? I think it's, you think about just about a month with people not having SNAP benefits, clearly, that doesn't make any sense to me. But when you look at the spending habits of kids in schools, spending lunches and stuff like that, how is there any cross-section with digital tools helping family members or even state elected officials kind of, build more policies on how to, make families more successful financially.
Anybody?
I'll get us started, and then
Okay.
I'll obviously pass the mic to the rest of the phenomenal panel here. I will say that crypto is honestly at a point where it is challenging for people to immediately hop in responsibly, because it's also not only at the intersection of financial literacy, but like technological literacy. So, we're doing as much as we can to continue to educate the community. Even adults have sometimes, an issue trying to really understand the digital asset space. But I'm so happy that now that we have clear rules around stablecoins, we're finding that to be the best point of entry for communities that want to understand the opportunity of crypto and digital assets with the safety of the US dollar. And one thing that we've done in New York City specifically, Harlem and the South Bronx, is work with Give Directly, which is a nonprofit, to issue a program for digital financial resilience. And they're specifically focused on the 16 to 25 age range, because they find that that is the age range where you can have a material impact on the trajectory of a young person's life. That's when they're making big life decisions about, are they investing in their education or going to college, or what is like the future of their financial housing stability look like, things like that. And we, Coinbase, play the role of infrastructure provider, and they play the role of experts in administering the aid and understanding how to actually work with the community. So I think that you're going to see, at least in our, in our circumstances, it's best when you collaborate, and the tech company, is an expert in the tech piece, and then you also have community organizations or CDFIs that also have their own particular expertise, and together you have better outcomes. And the theory of change around this program is the fact that if you can give people a lump sum payment after they've been able to establish a particular credit history, that provides more financial resilience than every month here's enough money to just make it to next month. And that's what we like to see, and that's how we're supporting families in their financial resilience journey. And it's usually administered to that 16 to 25 age range, where they're responsible enough to be earning and spending their own money, but also it's a time in their life where you're actually going to have a material impact on their trajectory overall.
Thank you. Anybody else want to contribute to the answer?
I just say, something that child savings accounts. So I think it was probably 20 years ago, Citi was a big proponent of administering child savings accounts in a couple states across the United States. That concept has become a little bit more popular, and then layering on top of that technology advisory and coaching, like we talked about. We've seen a number of startups that are directly targeting teenagers and parents of young children, trying to set them up for success. It's really hard to build wealth in this country right now, and so how can we educate but also create products and services that enable families to start saving for their children, so that when their children reach adulthood, that they have
All right. I'm gonna check. Do we have time for one more question? Just one more question. There's one back. Is there one up here? Yeah.
Good afternoon. My question is for Ezra and Ms. Shields. When you talked about like giving the opportunity for people who get rejected for loans and stuff, I suppose you guys use like AI and different tools to see all the different characteristics of why they got rejected and why they could be accepted with you guys. And I want to ask if big banks like Citi and Wells Fargo are maybe using those ideas to maybe bring more people in. That's my question.
So a couple things. One, I'll start with just specific to my team. An investment that we made 2 years ago is a company called Prism Data, a really neat company based out of New York. They spun out of a credit card that was also a startup. And so they had 10 years of data to build a proprietary credit modeling, and it's cash-based. So they use Plaid to look at your cash inflows and outflows, and you might not have W-2 income. You might have a gig economy type income. And so with their algorithm, they can better predict your ability to pay what amount of loan. And so innovations like that are ones that my team has been really focused on looking at, and I know are of interest across the banking system too.
Yeah, I would completely agree with that, and I would say that the use of AI really is what allows us to look at the 10,000 plus data points that we pull to assess somebody's creditworthiness. I guess you could say we generate our own proprietary credit score, but what I would also say is AI is a big idea, big concept, and there are different types of AI use cases. So we primarily use machine learning, which is kind of the more old-fashioned, kind of boring version of it, to really automate tasks or to take data and train our algorithm on it so it practices. We don't send an algorithm out into the wild untested. And I would give our friends and counterparts at Wells and Citi for being very sophisticated in their use of AI as well. It's not just the fintech companies, and we're not doing it just to find new ways to say yes. We're all using it to lower our cost structure so we can lower the pricing on our products. So yeah, I would say definitely we're using AI as well. But I would also say that the larger banks are also quite sophisticated in their use of AI.
Okay. Was there any other answer? Anybody else want to contribute? No? Okay. I think that we're going to wrap it up. So join me in applause for our panelists. Thank you so much. We've got information on where to look up some additional policy discussions. I'm sure the panelists can stick around for a few more minutes if you have some individual questions. And I'm going to pass it on to Nicole to do the formal thank you and wrap it up.
Thank you so much.
Thank you.
All right, thank you, Marianne, and thank you everyone in our panel for joining us today. I once again encourage you all to please share what you learned today. Take your learning home with you with Catch Skills. Remember to scan the QR code on the, it would be your right side of the room here, so that you can track what you learned at today's program. Thanks again to our moderator and panelists. It is also important that we share the good work that these organizations and companies are doing for the community. If you're interested in energy, please stick around and join us in a couple of minutes. We will have our public policy briefing on shaping the future of energy beginning shortly. In the meantime, we have light beverages and refreshments outside of the room here. So if you want to freshen up a little bit, you can do that as well. If not, then this concludes our program. Thank you and have a great afternoon, everyone.
We need to take a pause for some photos, so, yeah, so let's just one and get some photos here.
How are you? Happy holidays. I'm good. How are you?
Thanks for the interns.
All right. Good afternoon and welcome, everyone. For those who stuck around, welcome back. For those who are joining us now for the energy briefing, thank you for coming. Sorry, it's been a long day, folks. My name is Nicole Marin. I am the Congressional Hispanic Leadership Institute's Director of Programs and Internships. Before today's programs, I have a few items to discuss. First, we ask you to help us share the speaker's points of view as well as your own. So please be sure to follow us on Instagram and X at the CHLI. After each panel discussion, there will be time for Q&A, so stick around for that as well. The discussions, including the Q&A, are being live streamed through FIU in DC's channel. It will later be uploaded to the CHLI YouTube channel as well if you wish to come back to our program to watch it later. The discussion is also being recorded, like I said, so you can view the program again later and share it with others. I would also like to take a minute to promote one of our partners, Catch Skills. Catch Skills is all about making learning count, no matter how or where it happens. We all pick up skills in different ways, on the job, through learning, in school, or even from everyday experiences. The problem is a lot of that learning isn't necessarily officially recognized. Catch Skills is here to change that. It's a platform that helps people track and showcase their skills, formal or informal, so they have a complete picture of their skill sets. Catch turns everyday learning into skills that drive growth. Throughout today's program, please feel free to scan the QR code you will see on this side of the room so that you can track what you are learning during today's discussion. It will take you to the Catch Skills website, and it will also give you a pre-written prompt to help you expedite the process of entering what you've learned throughout the discussion. Now, to kick off the program, I'll pass it on to CHLI's President and CEO, Marianne Gomez-Horta.
As you can see, Nicole is much taller than me. So thank you, everyone. Thank you, Nicole. Thank you all for joining us. The Congressional Hispanic Leadership Institute is the premier organization founded by members of Congress to advance the Hispanic community's economic progress with a focus on social responsibility and global competitiveness. Founded in 2003, CHLI is a 501c3 nonprofit and the only bicameral, bipartisan, Hispanic-led and Hispanic-serving nonprofit based here in Washington, D.C. We are dedicated to fostering a broad awareness of the diversity of thought, heritage, interests, and views of Americans of Hispanic and Portuguese heritage. I would like to recognize a couple of people here, our board members. A couple of them are going to be on the panel as well, but I do want to take the time to recognize the Honorable Bill Forrest, who's on our board. Thank you very much. He was also on our board when he was in Congress. Debbie Marshall with Chevron. Thank you so much as well, Debbie. And you'll get to also hear from the Honorable Ileana Ross-Layton, our chairwoman here. I like that they're all in the front row. And also Yvonne McIntyre with Pacific Gas and Electric, known as PG&E, also in the front row. Thank you. And I'm checking to see if we have any of our advisory council members. I don't see them here, but there is another group of people who I need to call out here, and that is our fall Global Leader interns. So they have been here for this semester. They spend 2 months on the Hill, and then they spend 2 months in a corporate office. And so anybody here or watching us virtually, if you're interested in one of the CHLI internship programs, you can basically go on our website. Nicole's information is there, so is mine. So you can reach out to us. We'd love to have you here as an intern. And before that, before I keep going on, I'd like the interns to please stand to be recognized because they finished their internship this Friday. Take a look, these are all going to be our bosses someday. So we just got to know who they are now. Okay, thank you. Also, a special shout out to our policy briefing sponsors. This is an annual briefing series that we have, so we want to make sure we recognize everyone. Amazon, Capital One, Charter Communications, Chevron, Citi, the Coca-Cola Company, Dell Technologies, Dominion Energy, Edison Electric Institute, Gates Foundation, Opportune, Pacific Gas and Electric Company, Pfizer, ServiceNow, and 2024 Media. Thank you all for your support this year. I also want to thank and recognize our team. You see them all here helping. They're the people looking super nervous. That's the team. It's Nicole, Bree, Angela, Sofia, Andres, Stephen, Bruce, Talise, Asa, Mercy, Tia, and Maite. Thank you all for your help for this briefing. I also want to continue just a little bit here on the briefing policy series itself. This is a platform for an in-depth conversation dialogue on current public policy issues that affect the U.S. Hispanic community as well as the Portuguese communities here. We do our best in these briefings to educate and inform members of Congress, their staff, and the Hispanic community across the country. Today we'll be discussing energy and how to balance innovation, reliability, and affordability. We will learn more about these topics and how they are all connected. There are many times that we don't pay attention to certain details in legislation because sometimes we think, that doesn't really impact me directly. But the reality is that even whether it's directly or indirectly, we are impacted. And it's important that we highlight some of the legislation that's important in our daily lives. And as I like to say every time in terms of energy, we sometimes take for granted we just turn a switch and then we have light. And so for some of us whose family grew up in Mexico and in other parts of the world, that's not always so easy. And so sometimes we take some of those things here for granted. So this is a chance to do a little deeper dive into some legislation and get different perspectives. Our guest speakers will provide different insights. Please take the time to listen to all their different perspectives. And now I would like to introduce our chairwoman, the Honorable Ileana Ross-Layton.
Gracias.
So come on here and stand here. Before she goes on, I always like to officially and formally,
please go ahead.
introduce her.
Add more to it.
There you go. I can add more?
Yeah,
Okay, that's dangerous. All right. So she was the first Latina elected to the U.S. Congress, where she proudly served from 1989 to 2019, including as chair of the House Foreign Affairs Committee. This is where everybody applauds. Yes. Congratulations. Born in Havana, Cuba, she built a legacy of leadership in foreign policy, Hispanic representation, and supporting women in politics. She now serves as a senior policy director. You're not vice president yet?
No.
Oh, okay. I'm just checking. I'm just making that announcement just to give her a promotion. Promotions are at the end of the year usually, so maybe that's coming up. And she continues to champion Hispanic and Latino leadership as the chairwoman of the Congressional Hispanic Leadership Institute. So let me pass it on to our chairwoman, also known as my boss.
Depends on the boss. She's the boss of me. And then I go home and Dexter's the boss. Come on. I only have the dogs to boss around. But thank you so much, Marianne. Is she not a terrific president and CEO? Yes. Buenas tardes. Good afternoon, everyone. It is such a pleasure to welcome you to Chile's Congressional Public Policy Briefing on energy and a whole lot more. Look at all that. The United States, our great nation, is working to strengthen our energy future, and the choices we make now will shape our economy, our competitiveness, and the resilience of our communities for decades to come. New and emerging technologies are opening the door to opportunities we could not have imagined just a few years ago. Artificial intelligence is accelerating everything from research to infrastructure planning. We are entering a new era of energy innovation. But progress also brings responsibility. We must ensure that our energy systems remain reliable and affordable, even as demand increases and the global landscape grows more competitive. Here at Chile, our mission is to create spaces where diverse ideas can be heard and where inclusive solutions can take shape. Thank you to our speakers that we will hear from in just a few minutes. Thank you to all of you for joining us this afternoon. I look forward to listening to an engaging and forward-thinking discussion as we explore how innovation and opportunities can work hand in hand to build a stronger energy future for our nation and for these wonderful graduating interns and global leaders. Así que muchísimas gracias, and I'm going to turn it over to my boss, Mary Ann.
That's as athletic as we get, okay? This is it. Neither one of us are athletes here. So I have the privilege and the honor now of introducing the moderator for the discussion. So let me just look through my notes here because, no, I can't say that. Hold on. Okay, here we are. So I would like to introduce our moderator, as I mentioned earlier, the Honorable Bill Flores. Bill Flores is a business leader, corporate governance expert, public policy advocate, and a frequent speaker on energy, which is why he's here, economics, leadership, and public service. From 2011 to 2021, he served as the U.S. representative for Texas' 17th Congressional District, where he played a key role on the House Energy and Commerce, Budget, Veterans Affairs, and Natural Resources committees. During his public service, he was widely regarded as a thought leader in shaping national energy policy and economic opportunity for veterans. Prior to his congressional service, the Honorable Flores spent over 2 decades in senior executive and board leadership roles across both public and private enterprises. His private sector career focused on job creation, economic growth, and delivering long-term value to a broad range of stakeholders, including public company shareholders, private equity firms, and institutional investors such as pension and retirement funds. He currently serves as the chair of the boards of ERCOT, the Electric Reliability Council of Texas, and a company called Nauticus Robotics, which is listed on NASDAQ, and as a director of CO2 Energy Transition Corporation, also listed on NASDAQ. He's also involved with the Houston Christian University. He's a board trustee there at the university, and of course his role with the Congressional Hispanic Leadership Institute. He's also a member of the Strategic Advisory Board of Veriton LLC. He's a licensed CPA in Texas, and he holds a BBA in accounting from Texas A&M University and an MBA from Houston Christian University. He loves to share that he has 2 adult sons, 2 wonderful daughter-in-laws, and 4 amazing grandchildren. Outside of his professional pursuits, he's passionate about flying and snow skiing. Okay, so he's the athlete among us here. So please join me in welcoming Congressman, the Honorable Bill Flores. Thank you. Moderate from here or there, wherever you want to do that.
I'm going to start with from here for a second, and then after our panelists are all seated, then I'll join them at the table. Thank you, Mary Ann, and everyone for joining us, or thank you for the introduction. Thank you, everyone, for joining us, and it's great to have Ileana with us again today. Ileana and I go way back, and, you know, it's hard not to love Ileana. It's a pleasure to be with you today as we discuss shaping the future of the U.S. energy landscape while balancing innovation, reliability, and affordability. Why is this so important? Energy, there are 2 things about energy that you can't escape. One, it's an essential element of life. Without energy, there is no life. It's just like air and water and food. If you don't have energy, you don't have life. The second thing is it's an essential input to the economy. Just like capital, just like labor, just like education. If you don't have energy, you have a low-performing economy or no economy whatsoever. So that's why it's important that we have this briefing to explore how the United States can strengthen its energy future by advancing emerging technologies while maintaining economic growth, grid reliability, and energy affordability. And as the chair of the board of ERCOT, which was brought in after Winter Storm Uri when we had sort of a grid failure in Texas, this is something I live with every day. This has become part of my DNA. We're going to examine how collaboration between public and private sectors can drive sustainable energy solutions, incentivize investment, and modernize our energy systems. The discussion will highlight effective policies, financing strategies, and regulatory frameworks that demonstrate how economic competitiveness and long-term resource resilience can advance together to build a secure and reliable energy future. Now, help me welcome our panelists. Debbie Marshall. Debbie Marshall has handled federal and international affairs for Chevron for 17 years. She serves as a lobbyist, one of my favorite, by the way, when I was in office, for the midstream business unit, shipping pipeline, which is shipping, pipeline, and supply and trading at Chevron, cybersecurity, and foreign policy related to South America, sanctions, and trade. Before that, she had a career on Capitol Hill, the Michigan State Legislature, and served as a federal government affairs lead for the state of Michigan, where she lobbied for the state of Michigan on behalf of funding and energy policy. Kwame Canty. Kwame joined EEI, the Edison Electrical Institute, as a political and external affairs team as director of external affairs in 2015, and since then he has been promoted to senior director. Now, who is Edison Electrical Institute? It is the trade association that represents the investor-owned utilities in the United States. And why is that important? Because those investor-owned utilities provide the power for about 250 million Americans. That's why it's important. That's why I'm so happy to have Kwame with us today. EEI is the associate. Well, I said that. Their members, this only says 220 million Americans, but it's 250 million Americans because I looked it up on ChatGPT a few minutes ago. and they hire more. They directly employ more than 500,000 workers. Kwame works on EEI outreach and education lobbying efforts to members of Congress. I bet that part's not very fun. National policy organizations, community-based organizations, and other key industry stakeholders. His background and experience working with a broad constituency base will be of great value add in explaining how the men and women of the utility industry work each and every day to power America. Jason Dela Cruz. Jason Dela Cruz currently serves as the manager of intergovernmental affairs team at Dominion Energy. Dominion Energy is a major U.S. Energy utility with millions of customers. He's responsible for leading the company's efforts in developing and maintaining relationships with non-government organizations at the state and national level. Jason joined the company in 2017 as a member of the Virginia External Affairs team, and in 2024 transitioned over to the Intergovernmental Affairs team. He's also represented the company on legislative matters with the Virginia General Assembly since 2020. Previously, Jason served as a legislative assistant in the Virginia House of Delegates and Virginia Senate. He also served in the office of the Executive Secretariat for the U.S. Secretary of Transportation, then with the Office of Federal Coordinator for Gulf Coast Rebuilding, created under U.S. President George H.W. Bush. Jason holds a bachelor's degree in political science from Virginia Commonwealth University. Yvonne McIntyre. Yvonne McIntyre is the Vice President of Federal Affairs for PG&E, Pacific Gas and Electric, you heard a minute ago. PG&E serves Northern and Central California and has approximately 16 million persons that it provides the energy for. At this position as Vice President of Federal Affairs, she is responsible for developing and implementing PG&E's federal engagement and leads a team advocating for the interest of PG&E before the federal government and policy groups. Yvonne has had a long advocacy career in the power sector, working on issues relating to energy and electricity policy, energy infrastructure, climate change, clean air, and clean energy. She began her professional career working as an electrical engineer, so she knows how to make things work. It's always better when you have a lobbyist or an advocate that knows where to turn the screws and the switches. So she began as an electrical engineer in power plants and distribution system service centers, so she knows where the sparks are. Yvonne holds a Bachelor of Science degree in electrical engineering and a Master of Business Administration degree with a concentration in international business. So I'd advise our panelists to come up and join me at the table, and we'll begin our discussion.
Can you hear me? Okay, the way this will work is I will ask each panelist a question specific to their country or the company or their area of expertise. And then after that, we'll have a couple of general questions, and then we'll have the really fun part. We'll save some time at the end to take questions from the audience, because I think that's where we as a panelist can learn a lot at the same time. So let's begin with the discussion. We'll start with Debbie. Debbie, why are you excited to be working in the energy sector right now?
There is so much going on in the energy industry, and what I've seen is, first of all, the conversation is changing, where we used to say it had to be an either or, and we focus it had to be either electricity or it had to be something in the oil and gas industry, or it had to be either renewables or oil and gas. And now we're talking about all of it, because the truth is energy demand is growing. We've all recognized that. You hear about it, about the data centers, but just think about your own home and how much more energy you might be using because of how many things you power. Think about how much you travel, and you've got to get there somehow, and something's fueling that transportation for you, whether it's a metro system or a car or a plane. So it's good to see the conversation actually changing. It's really exciting to hear people talking about it in a different way, not necessarily partisan, but really thinking about energy's role in the economy and how we can make sure that it grows. And I'm having fun with it, and I'm very excited about what AI brings to it, both as a place where we can grow our business and help power AI, but also AI that will help us with our technology to do our job better and cleaner than ever before. And I look at our company in particular, and we know that we're doing it better and cleaner than we have before. But we also know there's always room for improvement, and there are other things that we don't know. Even things like drones are giving us an opportunity to have a better look at our operations and see how they work, see where there might be a weakness, inspect a pipeline that's very remote. So it's, to me, this time with all of this new technology and with all of the young people who are coming out with a different kind of expertise than what I had when I was in school, it's a really exciting time to look at the industry, look at it as a career option, hint, hint to all of you. But to me, this is just an opportunity that I think is once in a lifetime to have a really full conversation about something that matters.
So is she excited or what? I can tell you, as a person that's in the energy industry, there's never been a more fun time to be in the industry. Kwame, given rising global competition and significant U.S. load growth, how can public-private collaboration help ensure that infrastructure investment keeps pace?
I think we need to really focus on working with our local communities around these efforts. I think oftentimes, and Yvonne may nod about this, sometimes companies and developers can get ahead of the local politics on the ground when developing data centers and other infrastructure projects. And I think getting ahead of that, making sure that the community is along for the ride with you, because not every technology, new technology advent sort of fits one community. It's not a one-size-fits-all type of environment. I also think there are different rules that sort of regulate different data centers and the like. And so working with your county commissioners, working with your local mayors and city councils to sort of set the table for the ground rules for how you want to engage. And ultimately that will yield results. I think in San Jose, for instance, there was a really big coming together around economic development and making sure that there was enough sort of generation to meet the demand in the community and that it served the community good. And I think those are the stories that we want to really lift up and exalt versus folks who are coming in on the back end and trying to explain to people why you need this. I think that can go down a slippery slope. I think you want to get on the front end and make sure that the community is along for the ride with you.
That they understand the economic development and the economic opportunity that comes with those types of, and the tax base, exactly. That's so important. Jason, Dominion Energy often emphasizes an all of the above energy strategy. Can you explain what that looks like in practice and how it supports both innovation and reliability?
Sure. I'll give a quick synopsis of Dominion Energy. So right across the river, we are the largest utility in Virginia. We serve around 2 million customers, electric customers in Virginia and North Carolina. We also have customers in both electric and gas in South Carolina, and then we have facilities across the eastern coast and across the country. So we have Data Center Alley. Data Center Alley is in Northern Virginia, again, right across the river. About 70 to 80% of the world's data flows through that area, and that is in our service territory. So we have to provide a lot of energy to that area, both reliable and affordable. So right now we're in a kind of an opportune time across the nation as data centers continue to grow, especially in Virginia. So our growth, right now we sit around 24 gigawatts of load. We're expected to double that in 10 to 15 years. So how are we going to meet that load growth? And right now, I will take any megawatt possible. It does not matter the technology. It doesn't matter where it comes from. I need it on the grid because we don't want to be in a position where we're forced to do rolling blackouts or rolling brownouts. That's not what we're here. We're here to provide reliable energy 24/7, but also make sure that's affordable. So with that is the innovation. So I'm sure we'll talk a little bit more, but we're investigating and looking at an SMR in Virginia. So we have a nuclear plant that's been operational for almost 50 years. We have a site near it that we've been exploring since 2024. Hopefully we have some good news that comes out next year. But that's 10 years down the line. So how am I going to get those megawatts on the grid? We're also looking at solar. We're building a large offshore wind project off the coast of Virginia. We're looking at natural gas. Again, any megawatt I can put on the grid, I'm going to look to do it. It's going to take a lot of collaboration, but when you talk about reliability and affordability, it also means that if I'm generating this electricity, how am I going to send it to where I need to get it? So that means more transmission. But more importantly, it means hardening the grid, taking old transmission lines, old infrastructure, and updating it to make sure it is reliable. And just, again, you have to have the same conversation as you're doing all of this, that it has to be affordable too. Reliability and affordability go hand in hand.
If I can add an editorial comment there, when you're short that megawatt, he says he needs every megawatt he can get, and I think a lot of states are in that situation, and Texas is as well. When you're short a megawatt, the price of electricity jumps up really high. And so to the extent that you can get a megawatt from whatever source, that helps keep electricity affordable and also make sure that we live the lifestyle that we want. Yvonne, how is PG&E addressing affordability issues, particularly relating to meeting new load from AI and data centers?
So affordability has long been an issue in California, so welcome to California's world, the rest of my brethren around the power sector. And because of across the board different reasons, a lot of people think, oh, it's wrong-headed policy in California, like adding, renewables and whatnot. So, yes, we do have some pretty expensive renewable energy contracts, but that's not the only reason. I think you all know the history of PG&E as well. We've had some pretty horrible disasters. We had a pipeline explosion, and then our equipment caused several pretty horrific fires. And so we've obviously spent a lot of money investing in our system to make it safer. We now have one of the safest natural gas systems in the country. And all the investment that we have made to reduce our wildfire risk, which including undergrounding power lines, increased vegetation management, system inspections, whatnot, we have reduced our wildfire risk by 90%. But again, that's all costs money. And so what we have been doing, we got a new CEO. She came in almost 5 years ago after the horrible wildfire disaster, and she kind of came in. She had been CEO of CMS Energy in Michigan, but before that she had been at GM, so she worked in the auto industry. And there is a system called Lean Operating System that kind of championed by Toyota, really kind of adopted in the auto industry. She brought that both to CMS and now to PG&E. And it is a way to kind of really look at operational efficiencies and really kind of identifying issues from, the ground, from the start, so you don't let it get out of control, addressing them really quickly. So that takes care of some of the problems of, spending a lot of money in the future when problems do arise. And then really streamlining our processes, streamlining all of our kind of like from payroll down to just how we do our engineering. And so we have been able to dramatically reduce our operating expenses. And so we've been able to reduce some of the expenses that are going into our rates. We've worked with the state to take some of their public policy programs off of our bills, and so actually in this past year we've reduced our rates 3 times over the past 15 months. So we've gone in the other direction that the rest of the industry seems to be going. And then there's a lot of kind of concern now. I think a lot of the blame on increasing rates have been put on, the growth in AI and having to meet all this new load from data centers. as an industry, and particularly in California, we've had stagnant growth and actually decreasing load for PG&E over the past 4 decades. And so all of a sudden, we're going to see this explosive growth. And so the thought is that, to be able to meet that need, we're going to have to, invest a lot more, new generation and whatnot. So in California, we see a different picture. Because we've had reducing load and reducing number of customers over this past 40 decades, any fixed costs and our operational costs get spread out among a smaller number of customers. So as we see load growing and we see more customers coming into the system, that means there's more customers to spread those fixed costs to. And so we see that for every 1,000 megawatts of increased load, we can reduce our customer rates by 1 to 2%. And so that's what we're kind of projecting. In California, the other thing too is, again, there's this thought that we have rolling blackouts and brownouts all the time. We do not. We have excess capacity on our system. We have so much solar that during the day we are dumping power. We're paying other states and other companies to take it during the day. And so we see that, and so our system is utilized about 40% of its capacity. And so, we just see a lot of opportunities to be able to meet the load and not pass those costs on to our customers. Now, eventually, if the growth becomes, I think we're projecting, after we get to beyond 5 gigawatts, we are going to have to add new capacity. So there are investments that are going to have to be made, but we still project that for our customers, for the state of California, we're not going to have those huge rate impacts that others are expecting due to increasing load from AI.
So before we're going to start round 2 now, and I'm going to ask each of the panelists to keep their answers shorter because we want to have questions from you. But let me give you a setup for the next question so that you'll get an idea of the perspectives that the industry is facing. In Texas a year ago, in December of last year, we had what's called a large load queue where people wanted to interconnect to Texas to bring a data center or a plant or something to connect to the grid. That had 56 gigawatts of total load in that queue. Today, 1 year later, it's over 4 times that amount. So think about that. That's like adding 3 Californias to Texas. And it's just crazy. So the people that handle that have really gotten bogged down. So that cues us up for the next question. That is, AI is transforming energy planning and grid operations. And so, Kwame, from your vantage point, how can electric companies leverage AI to strengthen reliability while keeping bills stable?
A couple of things. I think AI can help us in a couple of ways. Because of the quantum computing power of AI, we want to use it to maximize efficiency. And so predicting patterns so we know where load growth might be coming on our systems. We want to use it to optimize maintenance so we can see where problems are going to happen before they happen. And then lastly, we want to use it to improve like storm response. And so, obviously we use a lot of factors to predict weather in our business. We want to use that so that AI can be a tool to help us see over the horizon on our systems to see where we might want to deploy trucks and IBW and or our labor force to sort of mitigate those storm issues that come about.
Yeah, very important. Jason, following recent announcements, how's Dominion Energy integrating emerging technologies like advanced nuclear, like SMRs, into its long-term energy strategy?
Sure. I already talked about our load growth and what we're expecting. We have similar requests in a queue system like they do in Texas as well, and we're 60 gigawatts plus that we're just continuing to manage as it comes through. So for us, we have an IRP process, integrated resource plan. We release it every 2 years. It is a non-binding contract, but it's basically forecasting on how and where we're seeing our load coming from and how we're going to meet that load demand. So we just updated our IRP, and we're looking at SMR technology. We're looking at new technology for transmission. We're looking at more battery storage, long duration. I'm sure eventually hydrogen, not hydro. We already have hydro. So, I mean, that is really what we're looking at, but we're also being innovative. So looking at virtual power plants, taking school buses that are pretty much sitting there all summer long and making them electric, and then we can use those as a battery storage, and we can aggregate that and put it onto the system. So being creative in that way.
So Yvonne, we've heard a couple of great examples of how utilities are using AI. Tell us what PG&E is doing.
So we are already utilizing AI to help with wildfire mitigation, and so we have drones that are have AI capable cameras that. So our service territory is 70,000 square miles. A lot of it is wooded, forested, rocky, mountainous terrain. So it's hard to get to, and so being able to have drones go out there doing system inspections, looking at, if you see they detect smoke and they can tell like, oh, that's a campfire. It's not a, tree that's on fire. And so, we've already been able to use it to utilize for wildfire mitigation purposes. And then and I think Kwame identified some of the ways that we can use it in our system. So system inspections, not just wildfire related, but we have sensors installed throughout our system that can detect, vibrations and deterioration. We're going to be using it to match, load and capacity, and looking at it for, there's when new load comes onto the system, and we're planning for that, you got a customer that comes and says, we need, however many, megawatts of power, and you kind of really figure out that they don't need it, 24/7.
Exactly.
And so, kind of being able to work with them to determine when exactly do you need it and what times do you need it, with the best kind of resource to get it from. And so there's a lot of different ways that we can utilize it to increase the efficiencies of our operations. We are the first nuclear power plant to use it to actually for data management, like records management. We are required to keep, millions of records, and then to be able to access it really quickly, to glean that information has shaved, hours and hours off of, personnel time to free them up to do other things. And so, it's just a tremendous resource and technology that we're going to be able to use for our operations.
Now, is this what we could call smart grid? I mean, using all these tools. I mean, isn't that what PG&E
that's part
is?
of it. So part of it is considered smart grid. I mean, we're talking about using grid enhancing technologies to also kind of help increase capacity on the grid. And so I think all of us are looking at different ways to utilize different types of grid enhancing technologies, new things to squeeze more out of our current system. Like, as we're all saying, we need as much energy out there as we can get, and it's going to take some time to get new energy resources into the system. And so how can we utilize our existing system and squeeze more out of it? And grid enhancing technologies and other types of new technologies that are coming out there are going to help us with that.
Well, Debbie, Chevron lives in a little bit different part of the energy space from our other three panelists here. But how does AI? How do you think AI is important as we think about it in the energy space?
Well, it's just amazing to me the possibilities that are there for AI. When you think about our actual energy production, we can look at data analytics from seismic data, for example, and say, okay, we need to figure out the exact best place to place a drill to get what we can safely out of a resource. And so having that extra level of analysis that helps us figure that out is amazing. It also, we have to manage our own power as well. And a lot of people don't realize that we create a lot of our own power in place for our operations. That keeps us off the grid, so it keeps us from straining the grid the way some other industry might. But if we're going to do that, we also have to make sure we do that in the most efficient way possible and the safest way possible. So it's giving us a lot of opportunity to look at our own operations and see where they work better. In terms of safety operations, this is really important. Can AI possibly detect a problem in one of our pipes before somebody else might figure it out? Or will it amp up our ability with the sensors that we have to analyze that data and figure out where we might have a problem in the future and fix it before it happens? To me, this is all super exciting because our most important thing is the safety of our workers and the safety of the communities that we're in. And so we can't deliver on what we promise if we can't meet that fundamental safety goal. And I think AI is going to help us do that. And then just from a government affairs perspective, I have to go teach people about our industry.
Yeah.
And isn't it great that this week I said to AI, because I've been practicing playing with it, I said, please tell me what members of Congress have engineering degrees, because you know who it's easier to explain energy to? People with an engineering degree. So it helps
Like
you kind
Yvonne.
of figure some of this stuff out. But it can help you get a little better perspective. The other thing I want to mention is we're very U.S. focused in this discussion, but around the world, our partners around the world also expect us to use the best technology, use AI. A lot of them are spending a lot of time investing themselves in developing AI. So this problem of the power grid, that's happening in every country in the world in different ways. But like I look at our operations in Kazakhstan, which happens to be our largest oil production outside the US, they have a huge initiative in AI because they recognize that this is something that they'll be able to use, but they're also looking at their power grid and how they're going to be able to provide the power for it. So this is not just a conversation in isolation. And I think around the world, especially because a lot of these AI companies are in multiple countries, we're going to learn a lot from each other. That again goes back to my first point. Most exciting time that's been in the energy industry for a long time.
It's true. It's a time of challenge, but it's challenging times are the most interesting times. By the way, the AI search that Debbie used to answer that question used 10 times the power that a Google search used 3 years ago. So think about that. So every time you're using ChatGPT or Perplexity or whatever, you're using 10 times the energy that you would have used 3 years ago with a Google search. So Jason, what policy and regulatory frameworks are most effective in aligning innovation with infrastructure planning during the energy transition into a cleaner and more affordable future?
Sure. Thanks, Bill. So I would say, well, one, Dominion Energy is an investor-owned utility. We're a vertically integrated utility, so we own the generation, transmission, and distribution, so all the way through. That is not unique. There's other investor-owned utilities that are like that across the country. There are also areas that are divided. They may own one or two of the sections, but not all three. And then in Virginia, and both in South Carolina, we have a regulated model. So we are a regulated utility. So we have to do what our regulator says. And anything that we propose, we have to go to our regulator. Why that's important is that anything that we propose has to be seen as reasonable and prudent, if you're going to get very technical with it. But more importantly is that they are balancing both what is affordable, but also what is going to increase reliability. It's also good and important that you have them and you have your regulator and you don't have anything that's holding them back and tying them back. So in Virginia, 2 years ago, they decided to kind of put more power to our regulator, our State Corporation Commission, remove a lot of the power that General Assembly was doing, which is great because every couple years, you might have a different makeup in that General Assembly, so you're balancing back and forth. So in 2023, it was the Rate Reform Act, and we put a lot more power to the SEC. Our State Corporation Commission, and any corporation commission, has a extensive staff, and they are extremely smart, and they know how to handle all of these issues and evaluate those issues, but they're also evaluating it with a non-bias other than make sure that this is necessary and this is also going to be affordable and it's not going to burden the ratepayer. I think those things are very important, and yeah.
Good, good. You know, one of the things you brought up, you talked about how the power is switched back and forth in the assembly. Energy shouldn't be a partisan issue because we all need it. And so the most durable solutions are bipartisan solutions. Anyway, Yvonne, back to you. You were fairly candid a minute ago talking about the challenges that PG&E had because of environmental factors. What steps is PG&E taking to improve the resilience and reliability of your electric grid? You talked about some of that.
Yep, I talked about, on the wildfire mitigation side, but on the other side, and part of it's been mentioned, like with virtual power plants. So California, it's very difficult to build anything there. And so, as I mentioned, like how can we squeeze as much out of our existing grid as we can? So as I also mentioned, there's a lot of solar, there's battery storage. So we've been investing a lot more in batteries because when the sun goes down, guess what? All that solar power goes away. So we make up the difference where we still do have natural gas generation. We have the one remaining nuclear power plant in the state. We have a lot of hydro. And so complementing that with battery storage is what takes us over until the sun comes back up. But the virtual power plants, again, because there's so much solar, there's so many batteries and so many electric vehicles in our system, we're doing a lot of vehicle to grid testing so that we can then call on the customers, to provide power back into the system in times of constraint. And so instead of having to build something, we're utilizing what's already there. And again, AI is being helpful. Again, a lot of the vehicle to grid. And so we're just looking at all these different technologies, capabilities. We do an innovation fest every year where we've come up with a list of kind of our problems that have to be resolved. So whether it's wildfire related, reliability related, resource, restrictions. So we have a lot of the tech and innovation partners coming in, make pitches to us, and then we fund them. We pick like, okay, this is going to be the best one to resolve this particular issue, and we work with them on bringing new technologies to the market and developing them specifically to address our issues, but our issues are becoming everybody else's issues. And so, we're doing a lot of just seeing what we can do to make do with what we have.
I heard something pretty cool about, I'm going to brag on PG&E for a minute. I heard something, because we used to have a common director on the PG&E board that was on the board of ERCOT. And one of the things I learned is that after the fire challenges that California had, PG&E decided to harden the above ground infrastructure, where Southern California, Edison decided to try to bury things, and they're still trying to get it done, and it's way more expensive, and it's having an adverse impact on customers. So it's just trying to think about, you all were innovative in that.
Yeah, so we've hardened overhead. We've invested a lot in vegetation management, but we're undergrounding too, and we made a commitment to bury 10,000 miles of our power lines in 10 years, and we just hit our 1,000 mile mark in October, and that's dramatically increased. But and I can get technical, but the way that you also, the types of ways that we configure our system now as well. I mean, our initial kind of reaction to, making sure we didn't cause another catastrophic wildfire was what we call public safety power shutoff. So when we saw that there was going to be a high wildfire threat day, we shut down the power. And it impacted millions of people the first time we did it. And so over the years, we've learned to what we do called sectionalize. And so, we put switches, so that we can shut off power to a smaller section, impacting less number of people. And that's, again, dramatically reduced. And like I said, we've reduced our wildfire risk by 90%.
Good. Debbie, back to you. What role do you see the private sector playing in accelerating investment in next generation energy infrastructure?
Well, if you think about it as a taxpayer, which all of us are, do you really want the government to guess what the next technology is? I think the answer is no. We have actually strategic investment groups that look at new technologies that are out there. A lot of these startups will have a really good idea, but they lack the money to get to the next thing. And so we as a company said, we can do this. And we've got a group called Chevron Tech Ventures. And we look at some of these new technologies that are out there and we go, that one looks really interesting. For us, if we invest in something early and it pays off, yahoo, we've got a new thing that we're making money on. But if we don't, our investors expect us to take some risk, and we're taking risk that is from our investors, not from the general public. And when you think about good government, that actually makes a lot of sense. Now, there are things that the government can do. They can do things to get out of our way on the regulatory front, and we're hoping that permitting reform is going to move this year because it's really important for literally every kind of power and anything you want to build. It's really important that we do that. But also, fundamental research from the government is used for a lot of things that we do. And so there is a partnership there, and we have partnerships with the national labs that are incredibly important. But they do the kind of research that benefits our entire industry, because we aren't not going to give our technology or our hints to the competitor. So you've got to look at it in that way. And I think that we are more open than ever to those partnerships. And then, we do partner with the other companies as well where it makes sense. But I think when you look at it, you just have to think about where you want to put your risk. And isn't it better to have companies that are smart and do this all the time, do the risk, than the average taxpayer hoping that somebody who may not be as expert on that thing makes the decision? So that's where I see it going. But I also think tax incentives are important. R&D tax credits are really important because that enables us. It doesn't mean that you're giving away the farm to a private company, but it is something that really helps companies go, okay, we can throw more money into that than ever. So I think there's a concert of policies that do it. There's never one solution, and I think for a long time we've kind of like, oh, we have to this way or this way, and we need to get away from that. We have to look at a concert of things that come together and create something that really works.
So next, Kwame, we've heard how Dominion uses AI, how PG&E uses AI, and collectively they have about 20 million customers. Your organization represents investor-owned utilities that have about 250 million customers. So if we could sort of take a higher macro view, AI is transforming energy planning and grid operations from your vantage point, from this really high level. How can electric companies leverage AI to strengthen reliability while keeping customer bills stable and affordable?
I think AI can be used, like I said before, to help optimize maintenance issues and see over horizons. But I also think, and not to get too political, I think you need a stable regulatory environment. I think investments in tax credits and loan programs from the federal government will help our industry provide, low-cost innovation to customers. But I think we need to do it in partnership with state and federal government. And I think absent that, the burden falls on my members solely, and that's not a good recipe for anyone. And so I think hopefully as the year goes on and time goes on, we can get back to more clarity as to how we can use investments from the federal government to help drive innovation and economic development in communities without having the customers burdened with all the costs.
Good. I'm going to have a couple of rounds of questions here where I ask each panelist the same question, and I'd ask that you try to keep your responses to about 30 seconds or so, because we still want to get to the fun part with you guys out there. We'll just start at this end of the table. Kwame, how can collaboration between the public and private sectors most effectively drive the next wave of energy solutions?
That's a good question. I think, if I'm being honest, I think we need more frank conversations about what the needs are. Energy demand, water usage is going to go up because of this new technology, and how the government and our industry sort of partner together over the long term is going to be what rules the day. I feel frank, I don't have a really good answer for that. But I hope that in the future we will have more commonality amongst policymakers and amongst business and the business community to help get to an ultimate outcome for customers on behalf of communities.
At least better alignment versus
alignment.
Disalignment, yeah. Same question, Yvonne. How can collaboration between the public and private sectors most effectively drive the next wave of energy solutions?
I think Debbie touched on what I had written down that I was going to say. So collaboration with national labs on new innovative technologies and helping bring new tech to scale, effective federal policies and regulatory reform, so permitting reform. But also, and in the name of affordability, it is very important that there continues to be an aspect of federal financing, cost sharing, because a lot of the stuff that we're doing initially is going to be expensive, and so being able to do these things affordably, it's important to have some partnership with federal agencies for financing.
Good. Jason, do I need to repeat the question? Okay.
I think you're hearing kind of a synopsis here, or like a same kind of tone as regulatory. I think the public, the government establishes regulatory in their regulatory systems, targets, things of that nature. It is up to private entities, utilities, in order to have that, meet that target, but also be innovative. So we need more collaboration, but we also need to have a regulatory system that doesn't burden our companies or other companies with unattainable goals. I think we need to be realistic, as Kwame was saying, when it comes to meeting this low growth, but also making sure that we're putting in protections to meet and protect the individual ratepayer, not just the big boys, if we want to call them that way. So I think that's going to be kind of an opportunity going forward. But I think utilizing AI, I find it interesting that we are building to meet the AI demand. And I'd like to say that we don't have a data center problem, we have a consumer problem. But we're trying to meet this demand while we're also trying to utilize AI ourselves to better our business.
Yeah. Debbie?
So I will add an opportunity here, and that is for us to do education and for government to do education. We just need to understand where each other are coming from and assume positive intent. And I'm looking at the permitting reform discussions right now. I think we're in a better place than ever to have a real discussion about permitting reform because we've all set aside some assumptions and come to it and said, look, we've really got to get our arms around this problem. We need to be able to build things. Yes, we need to do it responsibly, but we need to have a discussion that's not just about us or them or build it or no. It has to be, how can we build this safely and affordably and provide to the nation what they need the most and keep us competitive? The nature of the discussion is changing, but I think it starts from people assuming positive intent from whoever is on the other side. And there's not just one side, there are multiple sides to everything that's going on. But to sit down and really have a true discussion and be honest about, like, this is what we need to do. And yeah, it is going to cost some money, and some companies like mine will have to pay some of the money. You know, we are all like in this boat together. But when you think about it, the energy ecosystem, we used to kind of talk about it as just oil and gas or just the facilities. But PG&E and we're each other's biggest customers. So we need to kind of get our own clue and then also educate people on that.
Yeah. Okay, again, I want to ask the panel to keep the questions, the answers short, so we're going to go through one more. So I'm going to give you an either-or question. So the first option you can answer, and we'll start with you, Yvonne, and go that way. How would you describe the biggest opportunities ahead for the energy sector? If you could highlight one element that would be the most essential to shaping the nation's energy future, what would it be? If you don't like that question, answer, what's keeping your CEO awake at night?
I will answer the second question.
Okay.
It's affordability and the ability to meet our customers' needs. And as we are facing, you know, the increasing demand, increasing load growth, and you know, after, like I said, 40 years of stagnant growth, of having a system set up that we're able to satisfy them. Kwame brought up San Jose earlier. They were talking about municipalizing. They wanted to leave the PG&E system. So we sat down with them. We have to understand kind of where they're coming from, who's coming on, what do you need, and how can we serve you? And so we're facing that in multiple different jurisdictions of our service territories, San Francisco, Fresno. So, you know, these are the things that are kind of worrying us. And then, you know, also attacks on the utility business model. There's this notion that utilities cannot meet this need. This growing need to serve AI. And so what can we do to kind of blow up the utility business model? We think that we are in the best position to do it.
So, Jason, one of two questions. How would you describe the biggest opportunities ahead for the energy sector? And if you could highlight one element that would be the most essential to shaping the nation's energy future, what would it be? Or what's keeping your CEO awake at night?
I'll not speak for Bob Blue, but I'll go with the first one. We're like in an energy renaissance. I mean, if you think about how we used, generated, and transmitted energy 15, 20 years ago, it's already different. And it's going to be different 15 or 20 years from now. So it's just the opportunity of being more innovative and looking down the horizon. You've heard a lot of the technologies, SMRs, virtual power plants, GETs or grid enhancing technologies. So it's just an exciting time to be part of energy because everything that we're doing is for the future, but then we're also looking at that future will change in 10 years, change in 15 years. So I think it's just the innovation is amazing. I'm excited to see where we go. But I also know that, you know, tying into the second question, it would be from our CEO, how are we going to do it and make sure that it's affordable?
Yeah, it's kind of like Debbie said earlier, energy's cool again. So, Debbie, how would you just...
the CEO question. I'll do it because...
What's keeping Michael awake at night?
Well, this is something I ask him whenever I get the opportunity because it helps me think about what we need to think about in the DC office. And the last time I asked him, he said cybersecurity, but it's been a little while. So what I'm hoping is that he's having sweet dreams about AI and the potential for what it can do to help make our company even better than we are. So I hope that that's what he is dreaming about now instead of losing sleep.
Okay, very good. So we're going to end this question with Kwame. You represent companies that power 250 million Americans. So which one would you like? How do you describe the biggest opportunities ahead for the energy sector? If you could highlight one element that would be the most essential to shaping the nation's energy future, what would it be? Or what keeps your CEOs awake at night?
The first question.
Yeah. That's more cool.
I would say like siting and permitting. if we have all this generation that we need to build out, but if we can't get that to market or get that to the end users, then what is it good for? And siting and permitting comes with its own sort of bag of tricks because, you may want that KV line to bring that power to your home or your community, but when we try to come to stakeholders to try to discuss like how to adjudicate that, they don't want it in their backyard. They don't want to see it. I had one specific instance that I worked on where a university, I will not name the university or the city council member, but they did not want the KV line to go in front of the university sign. And where they wanted the line sited ran right through a Hispanic community. And he represented a more affluent community in Arizona. And so that was a back and forth. But like NIMBY issues around transmission are going to really, I think, take off on the back end once we sort of solve how to, pay for and proliferate more of the technology. And that's going to be a question that's going to really be solved, not here, but I think locally. People are going to have to decide, how to, number one, invest, but also cite some of these projects that are going to be needed in order to bring generation online.
Kwame used an acronym called KV, kilovolts, 1,000 volts. And so when you see the big, tall, huge structures, those have thousands of volts from 118,000 volts to 765,000 volts. I'll give you an example of the NIMBY discussion. Texas approved a brand new 765 kV system this year. We're building like a whole new interstate highway system, but for electrons. It's going to cost about $34 billion, and it should be built out in the next 5 to 7 years. And so, of course, the NIMBY problems come up, and now we've got a new term called NOPE, not on planet Earth. Anyway, so now we're going to appreciate the panel for those thoughtful answers to the questions. Let's open the floor up for questions, and we'll have a CHLI team member bring the mic up.
Thank you. I really have enjoyed your presentation. I really appreciate it. I'm Fred Pfeffel. Has been a year since I left the Department of Energy, so I can really appreciate a lot of the subjects that you have mentioned. I was senior advisor to the Secretary on many of the issues. I now have I'm now in the private sector, founder of EPS, Energy Partner Solutions, and I'm also senior advisor to Hispanics in Energy and have been for a while. So my question, I have two, but I'll start with the one, which is, what is it that your companies are doing, your groups are doing to accommodate the needs and the impacts that the new technologies, the new demands are having on local communities? Let's start with that one.
Okay. Who would like to tackle that? I see the volunteers starting.
So, and I guess in what ways do you mean? I mean, I think the biggest impact people are seeing is affordability, right?
Uh-huh.
And again, so for us, I described like everything that we're doing, like regarding trying to get our rates down, but we also have like a plethora of programs, special rate structures, special packages. We utilize the National LIHEAP program. So we do what we can to ensure that our customers are on the right rate plan, that they're aware of the services and the help that we offer, and what else is available out there in the community to help them pay their bills. And as far as, again, the other kind of issues of interconnection, I also talked about that, of just sitting down, really kind of getting deeply involved in the communities to see what their needs are, to try to make sure that we are giving them what they need or working towards giving them what they need. Our people, our people are in the communities all the time, but it starts from the top. I mean, Patty Poppy, our CEO, is always out there, always talking to communities. We restructured our company a few years ago into a regional model, right? So we have regional centers. We have a VP that kind of, so that they're in the communities, they're meeting with the customers, they're meeting with the businesses, everything, every day, hearing people out, kind of just to see what they need, what their concerns are, and trying to work with them to, get them to be happy with us.
Yeah, Jason, your company's on the front line of this too. How would you answer that?
Sure. I'd say education, and it's being available. All of our press releases, anything that we do now, it both comes in English and Spanish, and then we're looking to expand that out. Anytime we have an open house, we have interpreters there. Whether it is any language, because Virginia is very diverse, and so we want to make sure that we're educating those folks who are coming in, but that we can actually talk to them and relate to them as well. So that's a big piece. Piggyback on Yvonne, it's being in the community. It's one, empowering our employees all the way up from a lineman all the way up to our C-suite, is that they know what's going on, and so when they're going to the softball games, the baseball games, the whatever they're going to, that they know what's happening in the in our company, that they can educate those folks when they have questions. That is one big piece, but it's also being supportive for those who are in need. We work through the LIHEAP and PIP program as well. We have a thing called Energy Share, where we put in an X amount of money every year, and it helps with energy assistance. And not just electric energy assistance, it's also for heating, for gas, propane, oil, but it also does weatherization for low-income housing. So I think it's just being supportive.
Next question. Okay. And if we keep the answers real short, we maybe get a third question in too. So.
Okay. I guess my question would be something that like the public may not be so, I guess like urgent about, but maybe the industry is. And I guess the question would be, how important is it for the industry and I guess officials to address small things that could affect the industry big, such as like copper wire theft?
Say that again. Address small things like big things?
No, small things that can make big impacts on the industry.
Copper wire theft. Okay. So who would like to tackle that one?
I actually bring it up specifically. I spoke to someone at PG&E and they had opinions about it. So. Okay.
So, I mean, it's a big issue. I mean, equipment gets stolen all the time, which then means increased costs for our company. We work, closely with our local law enforcement communities. We try to do as much as we can to make our system secure. I mean, some of our plants or substations, whatnot, I mean, they're critical infrastructure, and so, we're famous for the Metcalf incident where somebody shot up our substation, and
that's right.
And it's been on 60 Minutes and everything. I mean, that is the most secure substation now in this country, and so and you're right. Like, people don't think that those like little things have much of an impact, but they do, and we're constantly on top of it, really trying to work. And sometimes it's our own people who are doing it, and so we do get these reports of how many people were like arrested now, or and so we're focused on it a lot.
So we're going to go ahead and squeeze. I'm going to go over the time limit and squeeze in one more. So.
Oh, hi.
First, tell us who you are, where are you from?
Yeah, Jay Rickey, Stanford University. I'm curious. I know AOC brought up a good point the other week at an energy commerce meeting about, AI bubble possible, but then how there's kind of a few amount of actors that clearly are taking advantage of making data centers, possible in the country. Is it possible that other players like utilities can invest more in universities to kind of, build them some good research that can empower communities and local regions, so that maybe 10 years from now, maybe the majority of data centers, if it was in 50 states, actually was, developed by people and not just top corporations. Is that a possibility where, you could pay for your electric bill, but then maybe some of those dollars or cents is going towards the data center?
Anyone want to tackle that?
Can I do that?
Yeah. Go ahead, Debbie.
I think that we need to understand that everybody's got their talent, everybody's got the things that they can invest. And so, when you look at something that's really large, you need somebody who has resources to use that, and smart people working for them who can help do that. And individuals investing in something like they have the opportunity to do that as investors in a company or as investors in a nonprofit that's doing that work, or investors in helping schools with research. And the truth is, we do give universities a lot of money to work on various things, whether it's figuring out a fuel or helping us figure out how to scale up something that we're doing. So the university system is a really important part of the economy, and like we look at things that universities do across the board. There is so much that they can do, and there's a lot they can do with government that we can't do because they are government entities, generally speaking. So I think it's a nice idea, but the way to do that is really through investing in a company who can make the investment and make the decisions, because you don't want people who don't really know what they're doing to invest in something they don't understand and then wonder why it didn't pay off for them. Their money is finite. And I think it's hard for them. I as a person, I'm not going to invest in something I completely don't understand and hope for the best, because my retirement depends on that. So I think that we address it that way. We do support a lot of the nonprofits that do things, think tanks who think about things in a really bold way, universities. We've had a lot of use of university partnerships over the year on everything from biofuels to efficiency and data management, because they're the people who can sit and study it. And we are not scholars, we're doers. And so looking at those roles and saying, okay, this is the way that it can work, I think that's more the way we would look at it. But it's interesting that she's got a different thought process, and I appreciate that she brings new ideas to the table.
Yeah, I'll chip in on that one too. I think that it's important to recognize that each of us as individuals have strengths and weaknesses, and same thing with companies. Some companies are good at providing power or energy, but they may not be very good in building AI data centers. So, I mean, I look at Stargate in Abilene, Texas. They're spending $200 billion, and several thousand people go to work there every day, and that pays, that feeds their families and houses them and provides an education for the schools and a tax base. And I don't think that everybody in Texas would want to have a charge on their electric bill to pay for that. I think it's better for the company that wants to make that investment on their own and suffer the risk and rewards of making that investment. That's kind of what our system works like. So rather than trying to have everybody be an expert at everything. So I think that's it. I want to ask you all to give a warm round of applause to our panel for their thoughtful questions. Marianne, I think it's your turn. Good job, y'all.
All right, so a round of applause for also our moderator, the Honorable Bill Flores. Thank you so much. Thank you, everyone. And we always like to encourage at the end of these conversations, a little bit like we said in the introduction, we have the opportunity to be in this conversation here in Washington, D.C. So we ask that that you have this opportunity to use this information to share it with your, in your community, share it in your social networks, because this is a privilege. It's an opportunity to be here, and so we want to make sure that we have the information to share with others. And then just to kind of wrap up, this is our last briefing and our last program for the year. So thank you to all of you for being involved with our briefing series throughout the year. For our panelists who are part of our board and our advisory council, thank you for your contributions and for your leadership. Again, congratulations to the interns. In about an hour or so, we're going to be, formally giving them a certificate. We also have one intern. I don't think she's here. She actually has already started at a full-time job. And so we're super excited for her. She just started this week with Congresswoman Nicole Malliotakis. So we're super excited, and we love, that. And I get to say this publicly, too, in front of our board and our advisory council, that it's working. We're getting these students on the Hill. They graduate and then they get full-time jobs. So we're super excited and happy for them. And then last, happy holidays. Wishing you all happy Hanukkah, Christmas, and a happy New Year.